Hey, good morning, guys. Welcome to the room. Nice to see all 7 of you in here this morning. Slow start. Everybody's waking up late, I guess. How's everyone doing this morning? Safia, you are on fire, right? Taking care of it. Ron, taking care of business. Good morning, David, Z, Soph, Donna, T45. It's good to see you guys here this morning. I guess I'm going to give it a minute. Let's see if we can get some bodies in this room. Maybe something's going on today. I don't know. I don't think I've ever seen it this low in here. Maybe there's a Discord problem. Maybe people are just sick of me. Either way. Guys, can you hear me? Is my microphone working? All right, cool. Just making sure. Not the first time I've been ignored by a crowd of people. Guys, welcome to the room. I'm excited about the day. I get excited about every day, to be honest with you. Every day we get a little bit closer to the goal, right? Every day we're doing things a little bit better. Good morning, Soph. Good morning. Every day we're one step closer to where we want to be, just through repetition, guys. Going after the rules, studying the rules, practicing the rules, presenting the rules, and getting feedback. And that's what we're going to do again today. Today is what? Today is Thursday, June 29th. We are almost through June. Oh my goodness. And every morning I go to forexfactory.com and I like to take a look and see what's going on. We've already had some very high impact news. We've seen the final GDP price index, unemployment claims came out. And at 10 a.m. we're going to have some medium probability or medium impact news. Pending home sales at 10:30 a.m. natural gas, guys. Every morning I'm waking up, I'm looking. I want to make sure that I'm not getting caught in front of that news because it can make the market move a little crazy, a little erratic, change direction without a warning. So that's the first thing I do each and every morning. And then I go to the education page, guys, and I start talking to you guys about all the things that you can do with the software. I'm looking at the names here. There really are no secrets with what we do. I see people coming in now. I'm going to give it a minute before I really take off here. Education page is where everything happens, guys. The software user guide is your NinjaTrader how-to. For those of you that are new, I see you rolling in. Guys, this is your NinjaTrader how-to. As you start getting familiar with NinjaTrader, this is going to talk about scaling charts. This is also going to talk about capturing pictures, making sure that you can take pictures, post them in the room, feeling good about what you're seeing, getting feedback on everything that you do, getting you closer to where you want to be. Guys, this will also talk about market replay, connecting to your account, NinjaTrader 7 demo access, changing your lines, market flow, chart templates. Everything you need for the functionality of NinjaTrader is going to be found right here in the user guide. If you have a question during classroom hours, guys, remember, just make sure you ask. Not only will I try to get you the answer that you need, but I'll also show you where to find it in case that question comes up again later. And then, of course, everything that I talk about comes from the tutorial section, the education side of things. This is where we're going to talk about rules. You're going to see the rules. You're going to look at them. You're going to be able to recognize them visually. You're going to understand what they mean and the advantages that they present. And this is where I like to remind everybody, guys, there's a very distinct path to get to where you want to be. Some of you have been on it. Some of you are just now getting on it. Some of you are looking forward to starting it. Hopefully, if you're not on it, you're looking forward to starting it. And everything revolves around posting your trades in class, guys. This interactive classroom was designed so that you never have to wonder if you're doing it right. You never have to sit there and go, I think this was a trade. You can say this was a trade. I presented it in class. The rules were met. This was, in fact, one of those high probability trend trades. And then utilizing the spreadsheet that Nexgen provided you guys, it's just a trade journal. That's all it is. It is, after every trade, a quick little synopsis, right? Dear Diary, today I took a short trade. I followed all my rules and I won. It felt great. And you're going to use that first page of the spreadsheet as your trade diary. And the key is to go back every morning to look at what you did yesterday to see what's bringing you success, right? What worked? What didn't work? What made it feel easy? What felt forced? What made you nervous? What had you feeling like you were relying on hope? Guys, and if you do this every morning, it is going to accelerate the learning curve because what you're doing is you're beginning to build this recognition through repetition. You're beginning to build confidence through the memory of success. And then on the second page of that spreadsheet that Nexgen gave you, it's in your Nexgen Study Picks folder. There's your personal trade setup. So every time that you see a rules-based trade, take a picture, annotate the chart, tell the world what you see. Take a picture. This is all of my rules met. Because all my rules are met, I'm going to put it into my favorite looks folder. I'm going to come back. I'm going to look at this trade. I'm going to try to replicate it day in and day out because it gives me the highest advantage. Guys, that picture is also a great way for you to understand how to annotate your chart. Making sure that you write each rule. Tell me what you're doing. Tell me why you're doing it. And it's going to allow me to give you the absolute best feedback. We're going to spend the first hour of classroom like we do every day, just going over the rules, the trigger line and Fibonacci rules for when it's okay to trade. We're going to talk a lot about the advantages that those rules provide. And the rules that we discuss in the beginning are going to be the rules for a high probability trend trade. A trade where every indicator on every chart agrees for the trade. This is your highest advantage. This is going to be nothing in the way. John taking a later start today. This is the trade that teaches you, above all things, to be a chart reader. Your high probability trend trade is going to teach you to read your indicators. It's going to teach you to recognize three very key concepts. You're going to understand where the market is likely to continue, and you're going to be able to use that point for entry to get you into the market. You're going to understand where the market is likely to go, and that's going to give you an opportunity to create your targets based on Fibonacci. And then finally, you're going to understand where the market is likely to stop, guys. And this is what we call termination conditions. And it really is an important part of the study because not only can a termination condition, an area where the market is likely to stop, kill the trend, price reacts to Fibonacci, and you'll be able to gauge whether or not you should just sit on your hands and let an area break, or whether or not you are free to continue trading. But your chart reading is really going to be 90% of what you do. And your chart reading is what's going to take you to that next level. Understanding the rules for that highest probability trend trade is going to put you in a position where you can begin to add trades to the mix. You can begin to expand your knowledge base. You'll be able to manage a little more aggressively, a little more assertively. You'll be able to identify problems, and if you do decide to trade into a problem, you're going to have the chart reading abilities to manage aggressively, to reduce your risk, to maximize profit potential. Good morning, Jose. So we're going to talk about the rules this morning. I'm going to go through them the same way I do every morning. We're going to talk about what they are, where we find them, the advantages that they present. Good morning, Debbie. It's on you to simulate. It's on you to participate in the education, guys, to get out there and practice these rules, to build confidence with these rules, really to break these rules a couple times, present it in class, and let's figure out what it looks like when the rules are met and when they're not met. We're going to simplify today. We're going to focus mainly on that high probability trend trade initially. We're going to expand from that high probability trend trade to what we call a medium probability trade, where most of your indicators are going to line up for the trade, but there will be a small issue. And guys, this is going to be the vast majority of what you do during the day. There will be an issue present in most of your trades. It may not be a big issue. Hopefully it's not. But your ability to read charts is going to identify that issue. And when you take these trades, you're going to manage them assertively, and your ability to read your charts is going to allow you to manage them assertively. You're going to identify trouble spots, once again, through chart reading, and you'll be able to take quick profits, get to a zero loss level. So the high probability is that solid foundation. It's that chart reading foundation that's going to expand you to what we call that medium probability trade and beyond. So we're going to simplify, and by the end of the first hour, you're going to understand the high probability trend trade, and I'm going to give you the first medium probability trade that users typically go after. We're going to talk about the rules for it, the advantages, and how to recognize that. You can also go through and use market replay, guys. You can literally replay the day. Wake up, do your trading, come back after the market, and trade it again. Fix your mistakes. Take the trades that you skip the trades that you shouldn't have taken. And once again, take a lot of pictures of those correct trades, guys. Fill your spreadsheet. Make that your goal, 15 to 20 pictures every day. It becomes easy once you build the habit, but 15 pictures a day is 300 pictures in a 30-day period, guys. That's an awful lot of study, building confidence through repetition. And you're going to repeat this process every day until you're always taking the correct trades. Because if you're always taking the correct trades, it means that you're following your plan. And your plan should be a plan that only includes trades that have been proven through study to win more than they lose. And guys, that's how you guarantee yourself that you can win. That's when you start looking for trading live money or trading one of those Apex accounts, is when you take the time to work out the kinks, to get things where they need to be, to present in class, really refine the process, and then move forward. And guys, our high probability trend trade is a pretty simple trade. It takes a minute, maybe a couple days to start getting comfortable, to take the information, to really make sense of it so that you can move forward. Hi, Gary. Guys, can everyone else hear me, or is it just Gary saying hello? I'm all good here, not good here. Maybe I should type in there. Debbie, you hear me? Okay, cool. Just wanted to make sure. Guys, every now and then you're going to not hear me. It's probably on your end, but it's okay. Say, hey, is the mic on? Is there audio? Because I have allegedly been known to go through a whole tirade with the microphone muted. So anytime you don't hear me, it's okay. Pop it in there, and let's make sure that you're not missing something. Guys, your high probability trend trade is only 3 rules. These 3 rules create 3 advantages. And these 3 advantages are the recipe for a trade. If this is your focus as a brand new user, is to focus only on momentum, a clear path, and an entry area, that's where that chart reading comes in, guys. Momentum is going to really lead the way. Momentum is going to give you the highest advantage. It's going to create a market that is likely to push in the direction of the trend. That clear path is going to make sure that you haven't reached a termination condition. None of those areas likely to stop the market. And then that entry area is just refining down to that point where the market is likely to continue. The 3 elements of chart reading come together as 3 advantages to create a high probability trend trade. You only need 2 charts to make this trade happen. You're going to use a large chart as a broad stroke of a brush. This is the overall opinion of the market. This is what the gang is doing. This is what the deep pockets are pushing for. This is what the institutional traders are doing. And your large chart is going to define direction. You're going to be able to understand the overall trend in a matter of a millisecond looking at your large chart. You're going to be able to define momentum with those strong trigger lines. That's your rule number 1, giving you that advantage. And then you're also going to be able to define the areas that come into play. And that's rule number 2, making sure that you have a clear path. When you have these first 2 advantages for a high probability trend trade, guys, this is when you're going to turn to a smaller chart, a refinement chart. You're going to take that broad stroke of the brush and you're just going to knock it down into that area where the market is likely to continue. And using the smaller, faster chart is going to let you reduce your risk. It's going to let you maximize your profit potential. And that's your rule number 3. Rule number 3 is going to define your entry point. And when you use these 2 charts, when you use these 3 rules, you're looking at a trade that typically wins 70 to 80% of the time. And that's what we're going to focus on for the next 20 or 30 minutes, is what do these rules look like? What are the advantages that they give us? How do I recognize them in the moment so that I'm comfortable and confident taking the trade? It all starts with trend, guys. What direction is the market going? Your T3 trigger lines come in 2 parts, guys. There is a small trigger, which is a solid line. And that small trigger is the faster moving average. And then you have the large trigger, which is this dash line. These two are going to work together so that you can define trend, so that you can define momentum. When your small triggers break above the large triggers, it's going to paint that background green. And that green background lets you know that you're in an uptrend, that you should only be looking for rules to be met for high probability trend trades long, buying the market. When those small triggers break below the large triggers, it's going to paint that background red. That's going to let you know that you're in a downtrend, that you're only looking for rules to be met for high probability trend trade short. And guys, you can give yourself really the first advantage that's not even one of the recipes for a trade is simply trade with the trend. It's easy to identify, and it's going to put you on the right side of things more often than it doesn't. And I put the little note up there. If you never fought the trend, how would it affect your trading? How many mistakes could it eliminate? And as you go back and look through your trading, that's a great question to answer. Next, we're going to use those T3 trigger lines to define momentum. Rule number 1 says that you have to have strong triggers. Strong triggers are defined when that small trigger line crosses up above the large triggers in an uptrend. Both triggers should be wide, angled in the direction of the trend. And it's the space that's created between the two. I want you guys to think of scissors. When scissors are wide open, when there's a space between the blades, they're ready to cut, they're ready to do work. When the scissors close and the blades are one on top of the other, you no longer can really cut anything, guys. They're ineffective. So strong triggers are going to be that open blade. Smalls above the large are wide, they're angled in the direction of the trend. Smalls below the large are wide, angled in the direction of the trend. When you have this strong trigger look, you have a market that is likely to continue in the direction of the trend. It's what we call odds favorable momentum. You're going to see it annotated, OFM. Odds favorable momentum is that key phrase, guys. This should start every trade that you take, because when you have odds favorable momentum, that's when it is the absolute best time to buy or sell one of those pullbacks at Fibonacci. And you'll use that smaller, faster chart to refine this one bar on a large chart. And this tail or this wick that you see, these are pullbacks on a smaller, faster chart, utilizing that momentum, carrying you off to your profit target. So guys, strong trigger lines are going to be the way we start. That's going to be the key to getting things going. If you're brand new, if you're learning, if you are getting back into the groove, guys, give me a Y in the room if you're with me. Odds favorable momentum should set the tone for every trade that you take. It creates an amazing advantage, and it doesn't happen all the time. Sometimes you're going to have those closed scissors. We call that a weakening of the large triggers, guys. And when you have it, anything can happen up or down. It becomes kind of a crapshoot, a coin toss, whatever you want to call it. And you'll notice that these anything can happen triggers typically happen right before a reversal, right? Right before a trend change, when those trend trades are no longer effective. So when you have those weak triggers, Nexgen users, you're going to sit on your hands. You're going to wait for that advantage of momentum. When you get it, you're going to be able to refine it down to a singular spot to get you into the market to continue with that trend. And then when it weakens, you go back to hand sitting, right? Waiting for that advantage to happen until it pushes you down to your profit targets. And then we kind of go sideways. Sometimes the triggers don't agree. They don't agree with one another. They don't agree with the background. Guys, when this happens, this is visually. You're seeing the market fighting, buyers and sellers fighting. Rule number 1 keeps you focused on having the advantage of a market that's likely to move in the direction of the trend. When they don't agree, guys, it's easy to try to predict. It's easy to hope. It's easy to want to wish. Whoops, I just got kicked out. I am on my way back. Usually you guys can still hear me when I'm in the great beyond here. Let me pop it back open, get my chit chat back up, and let's get my charts back up. Kick out the cord every now and then, right? We're back though now. Carlos, you can see me. Debbie's got me. Awesome. Cool. Guys, you don't have to guess. It's pretty amazing. So many people hope. So many people wish. You guys don't have to. When it doesn't line up, when it doesn't provide that advantage, simply wait. because the advantage is coming back, guys, and you see it every day, throughout the day. And if we go to the live chart, what is this? This is the S&P. Let's tighten it up. How many times are you going to see this look? With odds favorable momentum, and there's a tail. And this happens throughout the day, every day. Odds favorable momentum, there's a tail. Odds favorable momentum, there's a tail. Guys, this becomes a study tool for you. This is going to help you identify in the moment that advantage of odds favorable momentum. And you can actually right click on your chart and load a template with nothing but your trigger lines. And just scroll back and see how often it happens. And what you're going to realize is that it does happen enough to put you in a position to be successful, but it also takes a little bit of patience because that odds favorable momentum slows down eventually. And when it slows down, look how the market turns. Sometimes it's the slowdown that creates the turn. Sometimes there's Fibonacci there that does it. But those anything can happen triggers are typically a prelude to a change. Odds favorable, there's odds favorable, another one of those tails. Guys, you can go back 10 days on 3, 4, 5 different markets and just get in the habit of practicing, of recognizing, of making sure that you can pick odds favorable momentum out almost instantly. This is going to be the easiest rule for you guys. This is going to be the one that provides the advantage of momentum, the one that you're going to recognize on a large chart in a matter of seconds. And when you have it, you're going to go on to rule number 2. You're going to go and make sure that no termination conditions exist, that there's nothing between you and your target. And guys, a termination condition is going to be a Fibonacci-based indicator that has the potential to stop the market. It has the potential to reverse the market. Price reacts to Fibonacci areas, guys. You're not the only ones that know it. You're not the only ones that see it. The guys that are in command, the guys that are moving the market, the guys that are making everything happen that we're taking advantage of, know exactly where these areas are. This is John Novak's chart from yesterday on the NASDAQ. One of the most psychotic markets you can trade, right? There's a lot that goes on, but it comes from Fibonacci resistance. It retests Fibonacci resistance, and it stops at Fibonacci support. Guys, that old adage, buy low, sell high, congratulations, you're with Nexgen now. You know exactly where low and high may be, and now we're just going to teach you how to take advantage of it. So you're going to be able to identify these areas, and you're going to be able to say, where'd my picture go? These areas may stop the market, but there's a two-part process to recognizing whether or not it will. First, you have to know what you're looking for, guys. We're looking for divergence highs or divergence lows. That's this cyan or magenta line that prints, and it prints from a pivot that's losing momentum. You're going to look for red Fibonacci resistance or blue Fibonacci support, and you're also going to look for these yellow 1-to-1s. Guys, when you take a look at these areas, you're going to be able to determine whether they're likely to stop the market or whether that market is likely to break with a simple comparison. And that comparison has two things happen. First, price reaches the area. Your price bars, your dynamic Renko bars in this downtrend with odds favorable momentum are cruising down, and they run into Fibonacci support. When price reaches an area, you're going to ask yourself, where are the trigger lines? If the trigger lines remain above support, no more short trades into that area, guys, because you've reached an area that may reverse the market. That's your whole recipe. Price reaches, if the triggers remain above support, no more short trades. Rule number 2 is not met. You don't have a clear path. Same thing happened up here, right? Price reached support, the trigger lines were above, and all of us were sitting on our hands, and we're saying to ourselves, I wonder what's going to happen. Is it going to reverse, or is it going to break? Guys, an area is considered broken when both the small and the large triggers get to the other side. So if it's trading into support and both trigger lines break through, get below support, well, now support begins to behave as resistance. The area is considered broken and your path is clear. So it's really just two options for your first trade for that high probability trend trade. You've either reached an area and none of the triggers are broken, Therefore, you don't have the advantage of a clear path. Rule number 2 isn't met. This is a textbook termination condition. Or both your small and your large triggers break through the area of resistance. That area of resistance begins to act as support, and you'll notice there's one of those tails, right? One of those best of the best entries to get you into that high probability trend trade. Guys, this is it for the beginning. Keep it simple. So termination conditions at a high. I give you guys a lot of pictures. If you're new to the classroom, I want you to get in the habit of stealing these. Put them into your spreadsheet, download them onto your computer. But when we're figuring out a termination condition from a high, when the market is trending up, this pivot that has a loss of momentum that shows you that divergence line, guys, this is not a termination condition. All this is a pivot that's losing momentum. That's all it is, nothing more. But what happens here is that loss of momentum creates a line in the sand. It creates an area where the sellers may push back 10 times harder if the buyers get back to it. So when price reaches that line and the trigger lines remain below, now it's a termination condition. Now it's an area that may stop the market. Now we're not trading into it because price reacts to key areas. If this termination condition creates a full reversal in the market, meaning that my large triggers go from green to red, that my small triggers go from green to red, that it gives me that odds favorable momentum the other direction. Guys, this is what we call a strong top. This is a good top. And this strong or good top is the precursor for the highest probability trend trade you can take. Trend trades that happen after a termination condition on your large chart have the best chance of success. That's that 70 to 80% winner. So price reaches resistance. All of the trigger lines remain below. This lets you know don't go long into resistance, even with odds favorable momentum, because it may reverse the market. Price reaches resistance and one-to-ones. All the trigger lines remain below. Guys, no more short trades, or no more long trades, into that area that may reverse the market. Price typically reacts to Fibonacci, and you can see the bounce that termination condition creates, and it bounces right back to support with absolutely no trigger lines above it. Guys, 90% of what you do throughout the day is going to be sitting on your hands, waiting for your rules to be met, waiting for that advantage of momentum, waiting for that advantage of clear path. All the trigger lines begin to break. We get a pivot with divergence. Not a great top, not a strong top, just a pivot with a loss of momentum. But when price reaches that divergence low and all the trigger lines remain above, now it becomes a termination. Now it's one of those pivot stop outs of a prior divergence line. Well, when this termination condition creates a full reversal, we're going to call it a strong bottom. This is the precursor for your highest probability trend trade. Go in the other direction. Price reaches resistance. Absolutely no trigger lines break through. It's a divergence high. Happens at a fib. That's powerful. But this termination condition just takes us to another, doesn't it? Price reaches down to support. All the trigger lines remain above. I'm not going long into resistance and I'm not going short into support. 90% of what I do during the day is sitting on my hands and waiting for advantages. Sometimes it takes 3 minutes, sometimes it takes 3 hours, guys. We are professional waiters, but when we get this divergence stop out, this pivot stop out of a divergence high, when it happens at Fibonacci, it's even more powerful. So when this termination creates a full reversal, gives me odds favorable, there's one of those tails, that best of the best, that opportunity for success. Guys, you're going to see termination conditions from highs. We looked at some examples of that. You're going to see termination conditions from lows. It's the exact same recipe. Price reaches support, triggers remain above, no more short trades. If this support creates a full reversal, gives me a clear path, guys, there's that highest probability trend trade before we reach the next area of resistance. Termination, full reversal, strong bottom, termination, full reversal, strong bottom. Guys, these are your two options, right? It's either going to be broken or it's not going to be broken. You're either going to have a clear path or you're not going to have a clear path. And if you embrace that simplicity for a little bit, if you embrace the idea that it can be easy, that when you have momentum, you should be looking for no termination conditions. Guys, it takes the burden of opinion away from you. It takes the burden of hope away from you. So these are the termination conditions. You guys give me a why in the room if you're with me. It's either broken or it's not, right? You either have a clear path or you don't. When price reaches support, if none of the triggers break through, you know not to trade into support because it may create a reaction like it did here. And when that support, that termination condition creates a full reversal, you definitely know you're not looking short. You're going to start looking the other way just as soon as you get that odds favorable momentum in the clear path. And there's another one of those circles showing you the absolute best of the best, guys. Your focus for the first 30 days. Learning how to enter where the market is most likely to continue because of the advantages present. Guys, there's two times where the market may turn. It may turn from a low, it may turn from a high. It may have a clear path in weak triggers and turn. It may have a clear path in strong triggers and turn. This final termination condition is one that's going to help you recognize change before it happens on a larger chart. And this is going to use your smaller chart, your refinement chart, your entry chart. And 3 divergences in the same price range may terminate the trend. Guys, this is the only termination condition that I'm respecting on a smaller chart. I'm not worried about lines. I'm not worried about anything other than 3 divergences in the same location. It may reverse the trend. 3 losses of momentum may do it. It becomes more powerful if your trigger lines go from odds favorable to anything can happen. And it becomes more powerful still if your third divergence is higher than the previous from a low or lower than the previous from a high. It's a head and shoulders pattern. Guys, you're going to see this look on a smaller, faster chart when something like this is happening on your larger chart. It's going to help you determine that the market probably isn't going to make that next area. It's going to help you determine that the market may push up the other direction, even for a moment. So these 3 divergences, when they happen on a small chart, will help keep you safe. When they happen on a large chart, you can expect bigger moves the other direction. So guys, those are your termination conditions. That's your black or white, broken or not broken. Only 2 options. But we said that your chart reading is going to take you into a medium probability trade. I'm going to introduce you to the medium probability scenario that you may face, guys. And it's what we call a 50-50 trade. And a 50-50 trade has absolutely nothing to do with the chances of winning the trade. It has nothing to do with anything other than 50% of your trigger lines will be above the area that you're wondering if it's going to hold or break. And 50% of your trigger lines, the large trigger lines, will be below. They're straddling the area, one above, one below. It doesn't matter which direction you're going. It may be one below, one above, one above, one below. But when you have odds favorable momentum, when you have the most advantageous trigger look, these areas have the potential to break. Strong triggers break things, guys. So this 50-50 scenario says that the area has the potential to break, but it is not a clear path because we're not going to recognize a clear path until both the small and the large get to the other side. So guys, 50-50 trades, if it's not a clear path, it forfeits the advantage of a clear path, right? Which means that your momentum must be its absolute strongest. No losses of momentum anywhere, large chart or small chart. It means that your entry area has to be concise and refined. You're not going to put an enormous amount of risk on a trade that doesn't even have a clear path. So we're going to see these 50-50 trades a lot, guys. They're magnificent trades, and I'm going to help give you a very solid basis for getting into them initially until your knowledge pool grows a little bit, and then you may find other reasons to enter them. So guys, we have the advantage of momentum on the large chart, right? Strong triggers. Termination conditions are false. We have room to our profit targets. We have the advantage of a clear path. Time to focus our attention on that smaller, faster chart, on that refinement chart. Guys, what happens in one bar, only one bar on that large chart, happens in 15 to 30 on a smaller, faster chart. This is how you're able to refine it to that point where the market is likely to continue. This is how you're able to reduce your risk, how you're able to maximize your profit potential, because this singular bar with the black box around it is happening in all of these bars. and you're going to pinpoint with accuracy where that market is most likely to continue. And you're going to do that by focusing your attention on the large triggers, the synthetic triggers on that smaller, faster chart. The large are smooth, the synthetic are stepped. And guys, these two work together to give you what we call favorable large triggers. And favorable large triggers mean that both the large and the synthetic are overlapping. They're one on top of the other. They're strong, they're vertical in an uptrend. They're vertical aimed down in a downtrend, guys. But when they're one on top of the other, it's going to give you your smallest window of opportunity, that smallest area where the market is likely to continue. As a brand new user, this is going to help you reduce the risk the absolute most. This is going to help you identify the best of the best spot with the most precision. So favorable large triggers are imperative to the new user as you learn to read your charts. And rule number 3 says that we are going to use a limit order, meaning that you're going to let the market come to you. You're not going to chase a trade. You don't have to go after it. The market is cyclical. It goes up, it goes down. The large chart defines all of your momentum. The large chart defines all of your areas. It's what the general opinion of the market is. Well, there's going to be a smaller group of people that want to fight that trend, that want to fight those triggers. And guys, we're going to take advantage of their silliness, and they're going to give us a pushback. And rule number 3 says, I'm going to use a limit order to buy or sell a pullback, a small retracement in price that's counter to that underlying trend. And I'm going to do it at an area. An area can be fibs, mid-bands, or one-to-ones. And that area needs to be inside of those favorable large triggers, which means that when the small chart gives me a pushback, gives me a reversal bar, I'm going to identify my window of opportunity. You can use a drawing tool to do this, and it's going to help you in the beginning as you study. And I'm going to identify the areas that may fall within those favorable large triggers, fibs, mid-bands, one-to-ones. From the highest point of support to the lowest point of support for a long trade, or from the lowest point of resistance to the highest point of resistance for a short trade. And guys, this is your window where the market is most likely to continue. And remember that that window is established when you have odds favorable momentum on a large chart. It's a freight train going in the direction of the trend when there's absolutely nothing in the way to slow it down. So guys, with that momentum, with that clear path, you're going to activate your limit order at the top of the window, at that highest point of support. And then it's up to the market to decide whether or not you're in a trade. And if it pulls back to that highest point of support, in this case, that mid-band, right inside of those favorable large triggers, you are now in a long position. You're long with the advantage of momentum. You're long with the advantage of a clear path. And you're long with the advantage of an entry at the area where the market is most likely to continue. Guys, this is your best of the best trade. Your window of opportunity, the easiest way to do it is first identify those large triggers. It's okay, put a box around the top of the trigger, the bottom of the trigger. You know that the trade should continue from somewhere within here. But from where? From that highest point of support to the lowest point of support. It's rarely as big as those triggers. It's going to be a little smaller, a little more concise. And if these areas are one on top of the other, it's going to be even more concentrated. Guys, you're in at 21 with all those advantages. Your initial stop, your protective stop, is going to go down here below that window of opportunity to that point where the market shouldn't go. And what happens is the pullback comes and it reaches that mid-band. And you're in this trade and you're excited. You have all of these advantages. And you have to be mentally prepared that this is a window. This is an area. It may go to the bottom of the window before it bounces, right? It might go all the way down. So you're going to have to visually see that P&L go against you. But remember that your advantages are coming from the larger chart. This is nothing but a smaller chart. Guys, there's also the possibility anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. It may go all the way past that window of opportunity where you are going to have a stop waiting, where you're going to say, this is no longer in that window. I no longer have that advantage. I don't want to be in this trade. This is a cost of doing business. Losing trades are a normal part of a positive equity curve. But guys, you're always going to trade protected. You're always going to have a stop in place because you can identify where the market's likely to continue. Guys, these small triggers on the smaller, faster chart may turn against you. That's okay. That's a loss of momentum on a smaller chart, but we need it to get back to that absolute best of the best spot. Guys, this is a trade that I'm taking 1,000 out of 1,000 times. This is a trade that gives me advantages and typically wins 70 to 80% of the time. This is a trade that I'll never miss. When the rules are met, I take the trade. When I get a reversal bar in the direction of my trade, guys, I'm putting my stop below that reversal bar. I'm reducing my risk. I'm maximizing my profit potential because I waited for the pullback. Guys, this is your highest probability trend trade. This should be your focus for the first 20 to 30 days. Going back, studying, getting to a point to where you can recognize the advantage of momentum. And then secondly, let's load up our indicators. Let's see if any of these pullbacks, any of these tails on the 13.2 had a clear path. Takes just a second for the fibs to calculate, but when they do, small and large going up, tail into momentum, there's a tail. Clear path here as well. Clear path here as well, guys. So all you have to do to study to get good at these entries is let's go back on a smaller, faster chart. And let's look and see. Did we get a pullback to an area inside of favorable large triggers? First one might not have made it. Second one sure looks like it did. What a great opportunity to go short and make an awful lot of money. And I know exactly what happened on this one because I was a part of it. Guys, I took an entry here this morning at a mid-band inside of favorable large triggers with everything saying up from a good bottom. The market gave me 3 divergences. When it did, I exited my trade. It said to me, Mark, it may push lower. It may be a moment. It may be indefinite, but you're losing your advantage. And I was able to exit this trade with a profit on my first contract, with a couple ticks on my second, keep the powder dry, ready to trade again. 3 divergences helps you identify change that's happening on the larger chart. But the larger chart leads the way. And this momentum, this direction, it ultimately takes the market up. So if you come back and it's rules-based, guys, if it pulls back to areas inside of favorable large triggers, that's your best of the best, guys. This is your study method. Right to a mid-band, right there at those large triggers. Right to the mid-band, right inside of those large triggers. Guys, you can go back and you can study this every day. Remember that we don't trade tails, right? We trade areas inside of favorable large triggers. So this is your study tool, brand new users. This is how you're going to create confidence in the methodology. This is how you're going to create trust in the rules. This is how you're going to create awareness of when those rules are met. Go back on your large chart. When you see rules 1 and 2 met, circle a tail. If that circle, or box in this case, lines up with areas of support inside of favorable large triggers, guys, you have that highest probability trend trade. You have a trade that typically wins 70 to 80% of the time. You have a trade that creates a statistical advantage, a trade that's going to allow you to be successful as you grow with the software. A simple plan for finding the absolute best of the best, guys. I'm going to give you a checklist right now. This checklist, I've never had anybody follow it exclusively and do worse than 70% winners, ever. If your job's to make money, guys, this is about the easiest way to do it. It takes a lot of patience. It doesn't happen every second of every day. But guys, this gives you all of the advantages. This gives you those strong triggers. This gives you that clear path. It's going to give you that area inside of favorable large triggers, and it's a checklist that's going to allow you to police yourself every time you take a trade. If these advantages were present, take the trade. If they weren't, sit on your hands, guys. Let it be that simple. Either your rules are met or they are not. If you're a visual learner, here's that exact same checklist. I'm going to put this one in the room too. Guys, I liberated pictures from the study material showing you exactly what each condition looks like, straight out of the manual, straight out of the presentation that I give every morning. And there's a video at the top here, guys. This is your tops and bottoms video. This is life-changing, helping you understand where the market's likely to turn, where it's not likely to turn, where it may break, where it may not break. John Novak put together a fantastic display here to help you get comfortable with it. And then I'm going to give you guys one more thing. My goal for you is that you write a trading plan, that you put pencil to paper and you say, this is what it's going to take to get me in, and this is what it's going to take to get me out, and I'm going to commit to this because this is going to be my road to success. Guys, your initial plan can be 1/3 of a page long. That's it. Simplicity. 3 rules, 2 charts. At the top of my plan, it says never fight 13-2 direction, large chart direction. Never fight the triggers. Ever. I had to add the ever because, guys, advantages go away when you do that. And my trade is that high probability trend trade. My trade is a trade that typically wins 70 to 80% of the time. In order to take this trade, my plan says that these rules must be true. These conditions must happen. If they don't happen, I'm going to sit on my hands and I'm going to wait for them to happen. If they do happen, I'm going to take that trade no matter what I feel, no matter what I hope, no matter what I want, because I know that these rules create a statistical advantage. Entries are the first piece of the puzzle, guys. Entries are what you're going to work on for 20 days. Getting in at that best of the best area. Getting in at the point where the market is likely to continue. And every great entry creates a manageable trade, creates a management opportunity. You're going to have to learn to manage these trades, guys. In the same way that a mechanical approach to entry is the most advantage for you, a mechanical approach to management is going to create that same advantage. It's going to eliminate hope and fear, anxiety. It's going to eliminate opinion. And guys, the easiest way I've seen to do this, let your initial stop be outside of that window of opportunity, right? Where that market shouldn't go, outside of those large triggers, away from those areas. And let that be consistent. Every time you take a trade, it's not a number, it's an area. It's an area where the market shouldn't go. Above that highest point of resistance for a short trade, out here, where if it goes that far, you don't want to be in this trade. Initially, your stop placement in your strategy may be 12 ticks. You know, give it some room, give yourself time to react, but ultimately your stop goes outside the window of opportunity. At this point in the trade, there's 2 potential things that are going to happen. Either your stop is going to be hit, you're going to take a loser, it's the cost of doing business. Losing trades are a normal part of a positive equity curve. If anybody tries to sell you something that they promise wins 100% of the time, run. It's not realistic. I either get stopped out or I get good news in the form of a reversal bar. That market's beginning to do exactly what it said it's going to do. It starts to trade with the momentum. It begins to trade with the clear path. And I get that reversal bar on my smaller, faster chart. At this point, I will reduce risk to 2 ticks above that reversal bar, below it for a long. And now I've gone from about 13 or 14 ticks of risk down to 7 or 8. And there's nothing for me to do anymore. Either that small loss happens because the market decides to turn and go up, or my first profit target is reached. And my first profit target's only $100, guys. It's an easy profit target to hit when the rules are met. And if it gets hit, you get the dopamine kick. You get the excitement. You get to keep that money. They can't take it from you, simulator or real. It's in your account. And because it's in your account and you're feeling good about it, and you're going to move your stop to break even. You're going to take all your risk off of that trade. And that makes it easier for new users to let it go to the second target, that $200 target. And at this point, once again, there's nothing for you to do. You either get stopped out, break even, or it hits that target, guys. And I can tell you right now that if you get stopped out, break even on the second contract 3 times during the day, that's only a $300 a day, right? And to a lot of you, you're like, what am I going to do with $300 a day? Well, what are you going to do with $1,500 a week? Or what are you going to do with an extra $6 grand a month? And what are you going to do when that simple math translates to $72,000 a year on 3 trades that don't work? The likelihood of 3 in a row hitting break even is pretty low if you're following the rules. But guys, it's not about taking all the trades. It's about taking the best trades, making your money, right? You either out break even or you're out with $300. And guys, that changes everything if that happens 3 times in a day, doesn't it? Suddenly, that's a $900 day, and that's a $4,500 week, and that's an $18,000 month from the exact same trade that just reached a target. Guys, if you stay simple, stay focused, keep it easy initially, learn to read your charts, learn to manage it methodically, pragmatically, learn to manage it without emotion, without opinion. Ultimately, every one of these great entries is going to create a management scenario. You're going to be able to look at your beautiful entry and your conservative exits, and you're going to be able to look at your large chart and say, but you know what? My trigger lines and my clear path said I should hold for a bigger move, and you're going to start turning those smaller trades into bigger trades. You're going to start turning those $300 winners into $700 or $800 winners, guys, and it's just going to add fuel to what you're doing. It's going to help you create that success, but it's the process. It's that simplicity in the beginning, learning to read your charts, that's going to take you to that next level, guys. Hopes and wishes don't make you rich. Process yields results. So that's your first, guys. That's a third of a piece of a paper. This is your focus, 20 days on the absolute best of the best. It's going to open your eyes and it's going to open doors. Remember we said that you're going to work into medium probability trades, right? Where maybe an issue exists. Your chart reading identifies that issue. In this case, it's going to identify one of those 50-50 trades. One of those trades where an area has the potential to break, but it hasn't broken. And you're going to ask yourself the same gamut of questions. Do I have strong triggers on my large chart? You have to, because you can't forfeit momentum if you're already giving up a clear path. Do you have strong triggers on your smaller chart? You have to. No divergence, no losses of momentum, right? Is it coming from a good top or bottom? Is that 50-50 coming from a termination condition that creates a full reversal? Guys, that adds a lot. And if you have these conditions met, enter at the area. Take that medium probability trade. But you have to manage a medium probability trade differently because it's not a high probability trend trade. That path isn't clear. You're still going to be outside of that window of opportunity. You're still going to respect that reversal bar, but your chart reading is going to have you doing a couple different things. If divergence prints, you're going to be able to exit that trade. If you identify the trouble spot, and guys, on a 50-50 trade, your trouble spot is that area that has the potential to break but hasn't broken yet. And if we go back to that 3 divergence picture, guys, if I enter a 50-50 trade at a mid-band and 1-to-1s inside of favorable large triggers, my first trouble spot becomes that Fibonacci area that hasn't yet broken. That's a great place to take profits. That's a great place to go break even. You're managing assertively. If no divergence is a requirement to get in, guys, then divergence should take you out, right? Keeping it as advantageous as possible. Guys, this is your keep it simple sunshine plan. This is your KISS plan. This is taking 2 trades, chock full advantages. Your job is to take 10 pictures of a rules-based short, high probability. Your job is to take 10 pictures of a rules-based long, to put those pictures in the room to make sure that you understand what you're looking for, and then begin to simulate those rules. And then when you move to the 50-50s, you're going to do the exact same thing. You're going to take a picture of that best short entry, right? Put it into your plan. When I have a 50-50, guys, my money is worth perfection on my smaller, faster chart. If I have an area with the potential to break, I don't want divergence. I don't want a large window of opportunity, and I'm going to insist on large triggers. And guys, this is a look that I want you to see real quick. Termination conditions happen on the 13-2, right? Termination conditions are going to happen on that larger chart. Don't get distracted on a smaller chart because of a line. That line on the smaller chart's creating a bounce to get you back to your entry, right? 3 divergences is what we're looking for to keep us from taking a trade. This fib at 4,003 is the exact same fib under 5-1. On your large chart with odds favorable momentum, because it's a different chart, because it's a different time frame, this is an area with the potential to break. If you look at it on a small chart, it looks like you're bouncing right off a termination condition, but you're not, because your termination conditions happen here. This is exactly what you needed to get you into the market to take that trade. Guys, that is a key lesson. You'll notice the small triggers turned against you a little bit, but they're outside of the large. It's still odds favorable. And that window of opportunity is so small that it creates the opportunity for you to have as little risk as possible getting into that trade. Guys, look for those 50-50 trades, right? Take pictures of those 50-50 trades. Make sure that they're the absolute best of the best. This is your plan. This is your study. This is your path to get you where you want to be, to give you everything that you need to be successful with the software, to study the software, to back test the software. Guys, if you do this work, if you go through and you do the work needed to be able to recognize high probability trend trades, if you do the work needed to create that recognition, to understand advantages, what you're going to find is life gets pretty easy for you as a trader. Life gets to the point to where it's almost simple. When everything says up, when everything says go, when everything has those advantages, you're going to be able to understand whether or not it's an entry. And guys, that's really not an entry, is it? Split triggers, they're not favorable. But that termination creates a full reversal and everything says up. This may be your trade eventually with a little larger stop when you learn how to read charts. Same thing over here, guys. This is crude oil. The smalls break through, the large haven't. Everything says down. And that market with no divergence, strong triggers, pulls right back to an area of resistance inside of favorable large triggers. Your job is to circle these tails, to say that this is a rules-met trade, and this is how I could have easily made $300 in a moment, just following my plan, following my rules. You'll notice that this tail is directly into one-to-ones with absolutely no trigger lines through, guys. That tail's not your trade, but this tail yields results. I want you to take this picture and let's blow it up a little bit. Whoops, wrong one. I want you to take this picture and I want you to take that checklist that I gave you and put it on it. Do I have odds favorable momentum on the 13-2? I do. Let's make that arrow something that we can see, right? Get over there. Do I have smalls outside of the large? I do. No divergence on the 5-1? I do. Am I coming from a good top or bottom? Guys, that looks like a termination that created a full reversal. I'm yes all the way through. My rules say enter at the area, guys, and if I'm in at 54, I'm out at the first trouble spot at 40. That's $140. And I'm out at 34. And guys, that's a $340 trade with the advantage of momentum, with an area that may break, with the perfect entry on the 5-1. And by the time this divergence prints and pushes things back up, I'm already out of this trade. And it's a $340 rules-based trade, guys. Is everybody with me on this? You're going to take this picture and you're going to upload it to Screencast. You're going to take this picture and you're going to post it in the room and you're going to say, hey, Mark, I used my checklist. I looked at my rules. I looked at my picture. And I am pretty sure that what I have going on here is one of those perfect 50-50s. Will you do me a favor, Mark? Will you verify that that is, in fact, a perfect 50-50? I want to make sure that I'm reading my indicators right. We'll have a conversation. Absolutely. There's really nothing that you could have done better. And I love that you didn't go short again to that area where the market is likely to stop, because look how that termination condition reverses the market. And if it really is a rules-based entry, guys, come back to your spreadsheet. If it was study, we're just going to put it into the rules section, right? These are my favorite looks. This is what it's going to take to get me into a trade. And I'm going to take that screencast link. and I'm going to pop it into this. I'm going to create a hyperlink, and I'm going to call it the perfect 50-50. And guys, I'm going to study this look tomorrow, and I'm going to make sure that I know exactly what I'm looking for to give me all the advantages to identify the area of entry so that I can get into the trade. And that's how you're going to study, guys. That's how you're going to create confidence. That's how you're going to create an understanding of the rules to be able to execute the rules. And that's your goal. Are there any questions about a high probability trend trade, guys? The first hour of class is a lecture. The second and third hours of class should be a discussion. We should be talking about what you want to talk about. We're going to talk about the pictures that you guys have posted. I see the same two people posting all day long. Guys, I want to see more participation. If you really want to be a day trader, if you really want to be successful, why wouldn't you get that feedback? Guys, Tiger Woods had a swing coach. Michael Jordan had a free throw coach. Wayne Gretzky had a coach. Serena Williams had a coach. I'm showing my age with these sports figures, right? But what the point is that even people at the absolute top of the game, the absolute best of the best, seek feedback from somebody that's on the outside looking in, somebody that doesn't have an emotional attachment to what they're doing, because it creates a perspective that helps you identify things that you may not see in the moment, that you may not see in the middle of a trade. So guys, warm up those TechSmith captures, get your snag it moving, post some pictures in the room, ask some questions. It doesn't matter to me what it is. I don't care if you're talking about a trade that you took. It doesn't matter if it's just chart reading. You might simply ask, hey, Mark, is this a term? Because you're not sure, because you're working through it. You want to guess. You don't want to ask, because what if you're wrong? What if you thought it was a termination condition, but it really wasn't? And then everybody found out, right? Wouldn't that be horrible? That would probably get your wife to leave you or your dog to bite you. You wouldn't be able to go to the club anymore. Or you would be just a little bit smarter, right? You would say to yourself, hey, I recognize three divergence in the same location. I recognize that it happened on a 50-50. I'm just going to sit on my hands and not get stopped out until everything agrees again. And when it does, maybe I'll take a shot at continuation because of the momentum on the larger chart. And that little conversation that you and I have might have gotten you into that long when the triggers rolled, right up to Fibonacci resistance. And guys, that's how it works, right? From fib to fib. That's the magic in Nexgen, guys. The education is the magic in Nexgen. The ability to get feedback on everything that you do. Being able to recognize highs and lows, take advantage of them. That's what we do every day. Guys, I'm going to take 5 minutes. When I come back, we're going to start looking at the charts that you guys post, and we'll get into that second hour. Back in a minute, guys. All right, y'all, let's get into the second hour. I'm pretty excited about it. Holy smokes, that market went down, didn't it? Egads and little fishes. And it did it directly from a termination condition, right from an area that our simple rule number 2 told us may reverse the market. And it looks like coming into that area, maybe found an opportunity, maybe not. Fibonacci works, guys, and look at how this works. Strong triggers, breaks, strong triggers, they're weakening. And the more they weaken, we reach these areas, you can see price reacting. Guys, this is the NASDAQ. It's all over the place. There is 1, 2, 3, 4 divergences coming from the low. So it's a fight between a loss of momentum and not having a clear path. And guys, that's what news does to the market. And there's your S&P, same reaction from the news. There's a 50-50 with no divergence right back to the mid-band at the large triggers, and down it goes. Guys, I'm going to scroll up to the top of the room, and I'm going to start looking at your pictures. I want you to see, I've got to go up like this. So if I am caught in the moment, and I'm scrolling, and I'm looking at pictures, and I'm going back and forth, I'm going to go from top to bottom. I'm going to try to answer your questions that are associated with each picture. We're going to talk about what you're doing, what you see, why you're doing. And then if you have a question about not just your picture, but anybody's picture, ask that question. Safia from yesterday, she says that termination condition creates a full reversal. Full reversal gives odds favorable momentum. Odds favorable momentum gives her an entry at an area inside of favorable large triggers. She gets paid twice on the way up. Safia, picture perfect rules-based trade. Absolutely wonderful. And then Safia also takes pictures because, guys, 90% of what we do is chart reading, right? 90% is looking at the charts and waiting for advantages. And I love the way that you did this. She said this is not a termination condition. That's a pivot, right? And that pivot pushes all the way back to the mid-band and support. The large triggers refuse to follow, which lets Safia know that she's not looking for shorts right here. Then that divergence prints. And when that divergence prints and those triggers roll, she's like, support to hold, divergence, weak triggers, wrong way. Waiting for it to work itself out. One of the strongest phrases you could ever use as a day trader. My advantages aren't present, therefore I'm going to sit on my hands and I'm going to wait. I'm going to wait for advantages. I know, right? Is it going to go up or down? I don't know, so I'm not going to take a trade. Safia, that's amazing. And I think that may be the first time I've seen you just post a little bit of chart reading. I love seeing those pictures, guys. There's about 4 different pictures that I take. The first one is just a chart read, right? And the chart read, when my rules aren't met, I'll take a picture and I'll annotate that chart. Hey, these are where my rules aren't met. This is what the problem is. This is why I'm not taking a trade. Because what I'm doing there is I'm kind of validating that I want to follow the rules, right? I'm confirming that my rules work, and since they weren't happening, I am verbally writing on my chart. Not yet. Don't do it yet. Guys, these pictures are great to help develop patience. They really are. The next trade that the next picture that I take a lot is a pre-trade picture, guys. When my rules are met and I'm getting ready to get in and my limit order is activated, I love to take a picture of that. I love to have that set up because what it does is it lets me go back. Let me see if I have a pre-trade picture anywhere. I'm sure that I do. But what it does is it lets me go back and determine, were my rules met? This was a pre-trade picture. I'm not in the market yet, right? But I have a limit order. So I'm identifying my advantages. And guys, if you get in the habit of running through this process, take a pre-trade picture. Even if you don't have time to annotate it, what it does is it lets you go back and say, were my rules really met getting into this trade? Or did I miss something? Can I go back to it without the pressure of a trade and reanalyze, because that's really strong. Guys, if you have time during the trade, is a great picture to take because it's going to help you develop a management plan. It's going to help you see any changes that may have been happening mid-trade. And then finally, guys, take a picture after the trade. What was the result? Was it the target reached? Did you get stopped out? Because sometimes after a trade, what you may find is that you didn't notice that 3 divergences printed against you. You didn't notice that the triggers got weak, right? You didn't notice that it reached a termination condition. So if you take these 4 trades, guys, that's 4 trades that you can take really per trade. So if you take 4 trades a day and 4 pictures per trade, guys, you're hitting that 900 pictures over the course of 90 days. And it becomes a great way for you to get better at what you're doing, to become a better chart reader. Who was this? This was Ron. I recognize this one. Ron says that with this momentum and this momentum, he's going to hop in, make a little money right down to that mid-band. Picture perfect, Ron. It's not a high probability trend trade, but what it is taking advantage of momentum in a clear path, being able to identify where the market is likely to go, and making a quick $500 with it. Nice job. And then Safia again. Guys, there's a reason Safia is so darn good at this. She posts a lot of pictures in this room. She asks a lot of questions in this room. Guys, that mid-band is acting as a termination condition because the large triggers are a full bar away. That termination condition creates a full reversal, gives odds favorable, pulls right back to a mid-band inside of favorable large triggers, and down it goes. Safia once again putting on a clinic for rules-based trades. Nice job. Even John Novak jumps in the room, guys. He is. You never bug me. Oh, let me say that very loud. Safia, working with you is an absolute pleasure because you're in that process. You're doing it exactly the way you're supposed to do it. You're posting your pictures, you're asking your questions, and you're making progress. Guys, I love it. I love your successes. You want to see something cool too? As John Novak said, I was still a little sleepy, and he circled the exact same spot that Safia got into a trade at. So Safia, 6 months in, is calling trades exactly like the CEO, the guy that wrote the software. Why? Because the rules are simple, they're basic, they provide advantages, and there's not a lot of room for opinions. It's just a matter of following the plan, right? That's all it is. Great job. Both of you. John, good looking picture. And good job realizing that you weren't awake yet, right? You haven't traded yet. So he said, you know what, I'm going to wait. I'll still study, I'll still take pictures, but I'm going to wait until my brain is where it needs to be. Guys, that's good. If you're not feeling it yet, maybe you had a couple drinks the night before, right? Maybe your allergies are kicking in and you're a little sleepy. That's okay. Sit on your hands. David, we have odds favorable momentum. That's a question, right? David, you're asking if we have odds favorable momentum? Guys, this is another one of the great things about the classroom is if you ask me, hey Mark, was there odds favorable momentum here? Watch how we can do this. You ready? I can go right back to the educational stuff. I can go right back to that trigger lines, and I can go to what should odds favorable momentum be in a downtrend. The smalls and the large should be separated. The large should be angled down. They should be wide. And sure enough, David has that look. David, that's a termination condition that creates a full reversal. That full reversal creates odds favorable momentum. That odds favorable momentum has you looking for an entry at an area inside of favorable large triggers. David, this is the perfect pre-trade picture. Your rules are met. So the only thing to do now is to let's take this picture and instead of asking the question, was it odds favorable momentum, is let's put a checklist on it, right? Let's make sure that it was in fact rules-based. The market is coming from a good top. It does have odds favorable. There are no terminations, and yes, there's an area inside. Guys, 1,000 out of 1,000 times, this is my trade. And this is such a pretty trade that I'm going to steal that link straight out of the room. You can't stop me. And I'm going to put it in my spreadsheet because I want to be able to do what David does. I want to be able to read charts the way David reads charts. I want to be able to identify those advantages the exact same way he does. So I'm going to give him credit. But I'm going to have that for a study tool, guys. And now I'm up to like 265 pictures. And life just keeps getting easier on me because I'm getting this recognition and I'm recognizing and I'm being successful and I'm pragmatic. And then I click on Safia's link and let's see what she did. Safia says, not a good bottom. It's a mid-band acting as a termination condition. As everything comes down into the termination condition, 50-50 areas to take short trades, and then divergence printed, no go. So into the termination, even with the odds favorable, Safia, you have the rule that says don't take it if divergence prints into a termination condition. I like it. But if there's no divergence and this much momentum from a good top, you're saying I'll take it and manage. Safia, I think that's a brilliant plan. I think it stacks advantages in your favor. And I love that now you're saying with divergence, no trade. And I think that's a huge move in the right direction, personally. And guys, y'all are going to make me blush with all the nice talking. I'm just here to annoy you guys, to keep saying the same thing until you can't stand it. You're like, okay, Mark, I'll learn the rules. Just shut up, please. Let's see. Gary says 50-50, no divergence, beautiful entry. Goes right back and retests that area with the potential to break and everything changed at it. Could have been a beautiful trade. Right up into it. You even had the HVA to support it. Good looking, Gary. As you wake up, sometimes you don't always catch the trades, right? Sometimes you're like, I need a second to read. I do it a lot. There's that same picture. Guys, if I wake up and I'm a little sleepy, I don't even turn off my simulator yet. Bad top, all the way to support. Triggers don't follow. Comes all the way up. Creates a divergence. Market's going silly, right? Smalls are up, large are down, one-to-one's held. Nothing says that we have any idea what direction that market's going. And Gary says, you know what? I don't have to guess. I'll wait for my rules to be met. And Safia says, everything says down. Hadn't reached that next area, and the small triggers broke that one, right? The look can be different on a large to a small. One divergence, she's in and takes it right to that next area. Bingo indeed. What a beautiful trade. And what's cool here, Safia, is you don't play the maybe game or the it's close game or the it might game. You said my triggers broke and I didn't touch that next blue line. That's a good looking trade. So I'm going to take the best entry. It's going to give me the lowest risk and money, money, money. Very nice. Safia is amazing. Whoop, that was my picture. You guys don't want to see that. Good morning, Marco. As for your plan, you're done for the day. You hit your goal, Safia? Man, now it's just margaritas and hanging out at the beach, I guess. Safia, can I ask you, and you don't have to answer, how long have you been with the software? How long did it take you to get this groove, to get this mojo? 6 months? And you've got it for the next 60 years, right? Guys, it's a roller coaster as you learn it, and you're going to wish that you were smarter faster, especially if you're an overachiever, and you work on it daily. It's a process, guys. This is your education that gives you the best career you could ever possibly have. Give it a little time, but it does click if you stick with it. Marco says on an 8 range chart, guys, it's just a trend trade. This is a pullback to a mid-band, right at triggers, everything says up, and he gets out before the news. Marco, I'm going to assume that a bigger chart supported that, but that looks like a good-looking trade. Safia, I had the best mentor ever. John Novak. Guys, all the love that you guys get from me, I got big brother stuff from John Novak. John Novak beat me up 17 Ways to Sunday. Treated me like a sibling. Thank goodness. It worked. But John Novak taught me all of these looks, guys. He's been teaching the same thing for over 20 years. Momentum, areas, right? Buying or selling pullbacks. This isn't a new recipe. And I was fortunate enough that he would take his time with me the same way I get to take my time with you. And guys, you can learn this. You just have to embrace the process. He gave me the exact same process when I started. And this is one of the things that people don't realize is John Novak gave me the exact same process when I started. And he told me, he said, Mark, this is what I need you to do. I want you to write down what it's going to take to get you into the market, and I want you to find me, he said 5 pictures of long trades and 5 pictures of short trades. He goes, every time you take a picture, I want you to post it in the class so that we can talk about it. Mark, I'm teaching a room. I'm too busy to give you private lessons on Skype. And he said, and then I want you to use the spreadsheet so you remember what they look like. And guys, I didn't do one darn thing that John Novak told me. I didn't take pictures because I remember things. I don't need to take pictures, right? I didn't use the spreadsheet because it felt like a lot of work. And I sure as hell didn't post in class because what if people saw my last name, Novak, and I post a loser? How embarrassing would that be, right? So guys, I fought his plan and I fought his path for about 30 days, until which point I determined that I was brilliant and ready to trade live. I lost 22 trades in a row. I lost $5,000 out of an account. I had no idea why I lost. I had absolutely no idea what I was doing, why I was doing it. And guys, I had to go back to day one. I had to go back and I had to embrace this plan. Within 3 months of embracing this plan, guys, I started teaching a 101 class, helping you guys avoid the pitfalls that I found, right? Will Melinda lead a class one day? She's too important. She's got stuff to do on the other side of the company. But guys, once I started embracing this path, within 30 days, I was teaching a 101 class. I was teaching you guys these basics in the afternoon. By the end of my first year, I took over this class for John Novak. And I'm not going to lie, this class scared the hell out of me in the beginning because I was still learning. I'm always getting better. I'm about 2.5 years in, guys, and I can tell you right now that I can read charts as well as anybody, and I can teach you guys to read charts as well as anybody. And this path right here is going to keep you from having to go through anything and everything that I went through that created a struggle. Embrace it. Embrace it. Gary, let's see what you're doing. Gary says, higher divergence, strong triggers, 50-50, no divergence, perfect entry, money, money. Gary, how easy was that? News in a few. I believe it is natural gas coming up. Guys, Gary's picture is unbelievable. It's a perfect 50-50, and it's such a good picture that I'm going to steal it once again. My 15 pictures a day don't have to be mine. Gary's perfect 50-50. Gary, are you around? Can I ask you a couple questions? Were you confident with that much momentum and everything breaking from higher divergences, 3 divergences on the bottom, strong triggers on every chart? Did it feel good? It looks like it did. With no divergence and crazy strong triggers, were you calm? I noticed that you held a little longer. This was a good one. And Gary, this one was simple. And if you've lost your confidence, Guys, most traders lose their confidence because they're chasing too much, because they're trying so hard to catch everything to be successful that they forget that there's a process. Gary, this is the one, man. That's the one. Keep it simple. This is 100%. This is the one. That's the one that's going to get you paid, right? That's the one that when you put the checklist on it, that's the one that gets you paid. Guys, there's no reason to chase everything else. All charts agreement. Focus on retracement to the areas inside of favorable large triggers, because sometimes it's not the mid band. Sometimes it's one-to-ones or fibs. When they're on top of each other, it's even easier. But guys, simplicity is such a great thing. I got a text the other day from a guy. He goes, hey, Mark, I just qualified 3 accounts, or I just qualified my account on 3 trades. He goes, and it's simple. It was the best of the best. He goes, and that's how I did it, and that's how we did it before. And guys, every time we go and form opinions, we end up coming back, right? Who is this? Earl. Anything can happen triggers, but a clear path. You make a quick little bit of money. Odds favorable momentum and a clear path. A page right out of Ron's book. Earl, great trading, bud. Nice job. And then Gary, once again, 50-50. No divergence. Up 1 divergence. Perfect entry. Out at the trouble spot. All charts agree. I think that's such a big thing, guys. All charts agree. Every chart says the same thing. Every chart says strong. Every chart says direction. Every chart has a clear path, right? Guys, look at the S&P. From resistance to support, overrun, weak triggers, 50-50. What did that 50-50 look like? Divergence. Huge gap back, straight into support. Guys, there's a fight going on that you don't have to be a part of. Let them work it out. They always do. Crude oil, that long went all the way up to fibs, weak triggers, pushed all the way back to one-to-one support. Triggers didn't follow. Guys, there's that gap theory. If price accelerates from those large triggers directly into Fibonacci, it's likely to close the gap. Guys, do you see how there's nothing to do here? The larger up, the smaller down. Rule number 1 isn't met. You don't have to guess. Price reached support, no trigger lines broke through. There's no clear path. You don't have to guess. Price reached resistance, no trigger lines broke through. Once again, you don't have to guess. The only thing you're in control of is whether or not the rules are met, which means that you've created this box, right? And until the market breaks out of this box, until there's odds favorable momentum, you don't have to get chewed up hoping that it goes short or hoping that it goes long. All you have to do is wait. Sit on your hands. Wait for the advantage. Give yourself 2 options, guys. Either the rules are met or the rules are not. Alleviate yourself the burden of hoping, the burden of wanting, the burden of wishing. So in crude oil, I'm in a holding pattern. On the NASDAQ, I had weak triggers, right? And I had weak triggers again. I gave away momentum, but I did have a clear path. But I didn't have any areas inside of favorable large triggers, which means technically the only advantage I had was a clear path. I forfeited momentum and an area inside. That should be enough to keep me out of a trade, right? And if it was, if my understanding of advantages is honed in, and I give away 2 of the 3, guys, it's not a high probability trend trade. It's not a medium probability trade. It's a low probability trade. It's saying that I hope this one thing carries me to the next level. And it didn't, did it? All you have to do is be patient, guys. Your rules are going to be met. The deep pockets are going to work it out. And when they do, we're going to be there waiting to strike. Gary, termination creates a full reversal. Full reversal gives you odds favorable. Odds favorable Gives you a no divergence pullback to the mid-band, right? But Gary, what do you notice about the large triggers here? Pretty much a full bar away, right? There's that huge gap between the top of price and those large triggers. Even if you took this trade right at the mid-band at 22.50, your stop was 20.50 when divergence prints, you might lose a couple ticks on the market that has the potential to go, right? It might be a couple ticks on a 50-50. This divergence is enough to get you out. Your stop behind the reversal bar, literally 6 or 7 ticks. Guys, you have to be okay with that. You can't see what happens after your rules were met and say, whew, dodged a bullet because I inserted my opinion, right? Dodged a bullet because I inserted my opinion. Because this was odds favorable. This was a clear path. And guys, this pulled right back a couple ticks above a mid-band inside of favorable large triggers. And it made that first trouble spot, and it just made the fib. There's some saying about opinions. I don't know if you guys have ever heard it. I don't remember it. I don't recall. But had the trade on, didn't fill. But that's good news, right? That means that you trust your rules. Nothing to do, guys. Smalls are down, large are up, support is held. Every trigger's below resistance. Nothing to do, waiting to break out of a range. Crude oil, waiting to break out of a range. Oh my gosh, guys, what a great time for you to go fill up a cup of coffee. For you to stretch your legs, put your hands above your head, right? Get a little blood flow in. Breathe deep. In through the nose, out through the eyelids. Sometimes there's nothing to do, guys. What do you want to talk about? What do we think about a 50-50 with 3 divergences? What do you think? Advantages or no advantages? K-Pops, 3 divergences in the same location. How does that make you feel about the world? TK, how about you? Kiana, you're so quiet. Take the pressure off. Trade sim. Follow the rules, right? That's it. Makes you hungry. If you're anything like me, you're always hungry. Stupid metabolism. Debbie says no. Debbie says, you know what? It might, but I might not. It's not worth it. 3 divergences may push that market lower, especially on a 50-50. You look like a foodie. I want to look more like a hot dog eating contest winner. They all have abs. I don't know how they do it. Isn't that amazing, guys? 50-50 with divergence. Absolutely no trade. Absolutely no loser. And as we pull back to support, the large triggers are still up, but the small triggers are down. If this is going to stop the market, these large triggers are going to roll. I don't have to guess. I don't have to hope. How's the weather in Dallas, K-Pops? Are you guys still popping over 100 right now? I know my boys were sweating in Austin, and friends in San Antonio were up in triple digits for quite a while. Yeah, Debbie, you're up there too, huh? Saturday, I moved to the desert. Record breaking. Saturday, I get into those hundreds out of the Pacific Northwest. Next week, guys, class is taught from Washington, not Oregon. Pretty cool, right? When you get good at something, it's hot and horrible in Tampa. 102 in Dallas, yeah. Guys, when you get good at this, you can do it anywhere in the world. I can teach this class from Oregon. I can teach this class. I've taught this class from Florida. I've taught it from Dallas. I've taught it from Houston. I've taught it from Austin. I've taught it from just outside of Big Bend National Park. I've taught it from New Mexico, Arizona, all up and down California. I've taught it from different parts of Oregon. I've taught it from Washington. Guys, when you're good at this, you can do whatever you want, wherever you want. Big Bend's amazing, isn't it, K-Pops? Bend, Oregon, been there too. I haven't taught it from Bend, Oregon, but I have been to both. Teach it from the beaches of Bali one day. Man, I fish at HEB, K-Pops. It's easier to catch. I like offshore fishing. I don't care for sitting at a lake. Um, Sitting at a lake isn't a lot of fun to me, but 40 miles off the coast and pretty blue water, I'm a huge fan. Guys, check it out. 50-50 doesn't work, pushes to support. Support holds a lot. And now the smalls are up, the large are up. We're trying to clear. In Turks, that would be nice. You should have. And then I'll come to Turks and go fishing with you. Only 86 in Houston, Tony? 92 with humidity. That's not bad. Guys, I'm 56 and mostly sunny right here. I'm getting spoiled by the summertime up here. Offshore fishing's fun. It's a different animal when you catch a 10 to 15 pounds. Summer in Europe? Hopefully this March, Marco. Got to go see Spain before I'm dead. Large triggers didn't make it. Small triggers went above. There was an area inside of favorable large triggers coming from a termination condition. I wonder if we're going to see 15087 or if divergence is going to print. Right? West Virginia in the fall. I think we're going to finish out in the desert, go back to Texas, do Christmas with the boys, and then we'll figure it out from there. But guys, this job affords you that lifestyle. Have a home base and then travel. There's crude stuck in that range still. No reason to hope, no reason to guess, right? Guys, if I want to fly out to Sarasota and beat my brother on the golf course, well, I've got to be a better golfer. But I can go try, and I can teach class from Florida. You can make money from anywhere in the world. Learn your rules. Follow your rules. We've been teaching the same thing for 25 years. Look at these stupid range-bound markets. It's all leaning down, isn't it? But how do we feel about those one-to-ones with no triggers through? How do we feel about a 50-50 here? How do we feel about triggers that don't line up? Isn't it amazing that if you just take a second and analyze, guys, it keeps you out of trouble? Hardest class in the world to teach, guys, when the market isn't giving me opportunities. There's NASDAQ, termination to 50-50 with a big ugly divergence. There's no reason, John, not yet. It'll all line up again, won't it? This might be a good time for the shark picture. Guys, there's two types of people in the world when it comes to trading. Seriously. There are the sharks. These are the guys that are making that NASDAQ move, guys. These are the guys that are creating the momentum. These are the guys that are reacting to the areas. These are the guys that are creating the advantages that you look for. Be a remora. This is why John says he's not seeing any great reasons, because the shark hasn't done his job yet. The shark hasn't tore up a tuna. So he's a remora. He's swimming. He's waiting. He's patient. Because eventually this guy is going to create opportunities. And John Novak has a set of rules that are going to allow him to take advantage of it. Safia has a set of rules. Tony has a set of rules. Debbie has a set of rules. You're going to have a set of rules that allow you to take advantage of it. You don't have to be first. You don't have to guess. You don't have to hope or wish or pray. You just have to let this guy tear stuff up, create momentum, right? Create a clear path. And you're going to jump in and get paid, guys. And that's how we do it. That's exactly what we do every day, waiting for advantages. The larger up, the smaller down. They're below resistance. They're above support. Divergence printed. Nothing agrees. Therefore, I do nothing. And doing nothing, like John Novak said, it is a skill. It is going to be the most important thing that you can do as a day trader is absolutely nothing when there is nothing to do. What do you guys want to talk about? I'm rambling at this point. What do you need to see to make you comfortable? What do you need to see to develop trust, guys? Where are you at in the process? My goal for you is that you develop trust in the software, right? That you develop trust in the methodology, that you develop trust in me to be able to teach you the methodology. Guys, I want you with confidence and belief and faith. I want you to be free from suspicion or doubt. I want you to have sureness and certainty and certitude. Playing Johnny Thesaurus here. I want you to have assurance, conviction, and reliance. And guys, you're going to walk into this with distrust. How do we get rid of it? How do we get rid of the skepticism, guys? Study is a great way to do it, isn't it? Being able to go back. Where's my picture? Being able to go back and identify advantages, to circle them, to commit them to memory, to learn the rules until it's easy. That's a great way to get rid of distrust, to get rid of skepticism. Guys, following rules, taking the right trades, seeing the results, being a part of this classroom and putting yourself on the path to success, you're going to develop trust. I'm just pulling all the pictures out now. Guys, I say this every day 1,000 times, and sometimes I feel like I'm pleading with you to be a part of your learning process. To minimize your learning curve, post your pictures of the trades in class. Guys, every day, win, lose, or draw. I don't take off points if you make a mistake, guys. I actually encourage you to post your mistakes in here because we're going to get to the other side of those mistakes. We're going to give you everything that you need to identify them, to correct them, and to put yourself on a better path. If you win and the rules are wrong, there may be a short-term victory, but a long-term failure. Getting lucky is a horrible trading plan, guys. Having a pragmatic, statistical advantage every time you enter a trade makes sense. How are you going to know the difference in the beginning if you don't post these trades, if you don't get feedback, guys? That's what I'm here for. I'm here to help. If you're on the simulator, if you're participating in class, guys, you can't lose any money. Your demo is free. Your platform is free. This education is free. Everything walking into this is free to teach you whether or not this is for you, to let you understand whether or not this teaching is really going to get you to the next level. And it will if you participate. There's no risk of loss or capital. You need someone to tell you what you did right or wrong, guys. I can't do that if you don't present in class. I can't do it. I can't see you behind your screen wishing you knew more about termination conditions. Give me the opportunity to help you guys. This is the magic that Nexgen offers new traders. This is a path. It's a proven path. Very often I get people coming back to me 3 months in. They've been trying to do it on their own. They've been trying to understand lessons without clarity. And they come to me 3 to 6 months in. And they're like, well, Mark, this is a termination condition on the 5-1 chart. And I'm like, but every day I say the only termination condition on the 5-1 is 3 divergences. Let's go through and get a lesson. And then suddenly they have clarity. And they're one step closer to their goal. And they wasted 3 months of trying to do it themselves. So guys, embrace the idea that I can get you where you want to be, or at least get you to the point to where you can read your charts to be comfortable. I can help you identify advantages. And then from those advantages, you're going to have a plan that gets you into a trade, right? 90% of what you do will be reading your charts. 10% of what you do will be waiting for odds favorable momentum. Waiting for a clear path, right? Divergence from resistance, divergence even lower from resistance, odds favorable momentum, and it's a 50-50 on this particular fib. I've already gone through the process, right? Hell, I could even have a limit order waiting right here and take a picture and go back later and make sure that this did actually fit my rules. But with that divergence potential, I have to be aware until this path is clear. Does that make sense, guys? Look how quick. Look at how fast you can gauge advantages. Look at how fast you can see odds favorable, clear path, bottom of the window, and know that if I get a pullback to this area inside of favorable large triggers, I have a trade that typically wins 70 to 80% of the time, which means that I also have a trade that typically loses 20 to 30% of the time, which means that I have to stop expecting to win every trade, and I'll probably start winning more of my trades. I have to stop worrying about the result, and I have to worry about the execution of method, because the execution of method provides a statistical advantage, guys. I believe it wholeheartedly. That's why that limit order is waiting just below an area of resistance inside of favorable large triggers. And because I have a clear path, I'm not concerned about divergence. And guys, look at this. The window is one line wide. It's 22, which means that my stop can go up here, 6, 7 risk, right? It may work, it may not work, but we'll see what happens. I don't even know if I do. In at 21, stop doesn't need to be that big, right? $100, $200, there's nothing for me to do except see if it works. But that's the process, guys, and I can go through and I can take the picture and I can say, were my rules met? Did I have the advantage of momentum? Was there a clear path? Is this a trade that typically wins 70 to 80% of the time? And if it does, fantastic. My stop is where the market shouldn't go. And if it doesn't work, that's okay too, because I'm not worried about anything other than the method. If my stop's where the market shouldn't go, guys, only one of two things are going to happen. It's either going to get hit, which happens, especially after a range-bound market, or I'm going to get a reversal bar. And if I get a reversal bar, I'm going to reduce my risk. I don't have an opinion about anything. The only thing that I'm worried about right now today, for my first 20 days, the only thing that I care about is I want to see a picture with an entry and an area inside of favorable large triggers, letting me know that you understand that's how you get into the market. And it looks like it's going to come get me, but it may not. My stop's where the market shouldn't go. I gave it room. My large chart's going to have to make a reversal bar to take me out. Otherwise, I'll stay in it with the advantage of momentum. Whoop, there it goes. No big deal. The only thing that I say when this happens, guys, is next. And just to be sure, I'm going to go to that pre-trade picture, and I'm going to put a checklist on it. Is the market coming from a good top or bottom? It is. It was a termination condition that created a full reversal. Did I have odds favorable momentum? I did. The smalls were below the large were wide, they're angled in the direction of the trend. I had a clear path. All of my trigger lines were below resistance, everything set down. And guys, I had an area inside of favorable large triggers. I'm obligated because of my plan to take this trade. Guys, I'll take it 1,000 out of 1,000 times. And I've had people ask me, Mark, if you take a loser in class, people are going to get worried. No, guys, you shouldn't be worried at all. Because you're going to do the study and you're going to see 100 of these trades and 70 of them are probably going to win. 80 of them are probably going to win. Every time this trade sets itself up, you're going to find yourself taking this trade. And it might still go. But this one got me, right? The advantages were there. Is everybody comfortable with that? Does it scare you to think that you might have to lose a trade? Keep practicing, it won't. Do you get worried when you watch a smaller, faster chart fluctuate against you? Guys, this was 2 divergences on a 50-50. Probably not your trade, but it went up to resistance, didn't it? That's not really even a 50-50. Smalls really didn't even make it. Guys, it used to terrify me to take a loser in this classroom, to get into a trade where the rules are met, and if it doesn't win, I felt like I was doing Nexgen a disservice. I think I'm doing you a bigger service to let you know that it's okay. It's okay for a trade not to work. It's okay for that perfect trade to take just a little bit of money out of your account, because the reality is, for every one of those that doesn't do what it's supposed to do, there's probably going to be another 6 or 7 that do. And if you're winning more than you lose and your winners are bigger than your losers, guys, it's virtually impossible to not make money. You're still in the, you moved your stop to 34, too much risk? It might be, right? So let's go back to crude. So John, If you kept it in, cool, you're behind the fib, right? That fib should hold, shouldn't it? Based on termination conditions, isn't that an area that may stop the market? So you could take it at 21.34. That's only 13 ticks. That's not outrageous, John, not at all. I don't think that's too much risk. I think that's smart stop placement. You gave it room to go. It's paying off right now too. You know what's cool though? Is that the smalls are still below the large are still down, and now my small triggers are beginning to roll. And guys, you know what? There's this cool little phenomenon where if the market pulls back to small triggers strong in the direction of the trade, right at an area, and the rules are still met on the 13.2, it becomes a continuation style entry. It's really just saying, hey, the market went up a little further than it should have. I'm going to see if I can find an opportunity to still get in. Because my 13.2 is still leading the way. Because my 13.2 is still a good look. And here it is the other direction, right? 3 divergences takes you out. It stays inside of those synthetics. Everything rolls right at the mid-band. It's just a continuation look. You just move your stop to the entry. So you're right at a mid-band. Right at those small triggers. This is a pretty common spot for that market to spike to continue down. So okay, so rule or target 1 is hit. Perfect. Target 1 is hit. Go break even. Let's see what happens. What's changed since you entered, John? Nothing really. But now your trigger lines are down. Isn't that cool? That's an advantage. Your large triggers are still down. Your synthetics are still down. Your smalls are still below the large on the large chart. You're coming off of resistance that held like a ton of bricks because all of those trigger lines are below it, and you're coming from a termination that creates a full reversal. Guys, we're stacking advantages like it's going out of style right now. Feels good, doesn't it? Yeah, John, I went outside of the window of opportunity because I was keeping it methodical and mechanical and trying to follow that very basic, simple plan that doesn't require you to do too much analysis to manage a trade, because the only thing that we're worried about for the first 20 days is making sure that you get in at the best spot because it creates manageable trades. But John in Alaska was nice enough to say that his stop was on the other side of the red line where the market shouldn't go, and it created a great lesson for potentially managing a trade. John Novak, walk in, hearing part of the conversation, passing judgment on his little brother. This is what I have to deal with, guys, every day. Sad to be me. Not really. John Novak's one of the best teachers that I've ever had. Sophia, what does 3 divergences against the trend tell you? It tells you that we're losing momentum, right? And 3 divergences in the same location may reverse the trend. It may, but the reality is this much strength beat those divergences on a small chart. This is where your management plan is going to have to come into place. 3 divergences on a 50-50 may not be your trade, but now we've got everything going. And every time the triggers break, it's just like an area. Divergence, triggers break, don't worry about it. Divergence, triggers break. So it's 2 right here that pulls you right back to a pivot stop out. And I think of divergences the same way I think of areas. Divergences break the same way areas break. And you can see because they quit printing, right? As the triggers begin to get above, yeah. So if this chart is railing in tons of momentum and you've already broken, Good stuff. And John in Alaska is saying, come on, market, get me to my profit target. Not necessarily, Safia. Large chart leads the way, right? Large chart says up, large chart says strength, large chart says momentum. Everything says up, right? But it is 50-50. So when the triggers get above this divergence, you have two divergences on a 50-50, right? So you're just kind of doing that math in your head. This one looks even uglier because it hadn't really broken that other one yet, but it's not the best look. Is it okay to miss a trade that you don't feel comfortable about? Is it okay to miss a trade if your rules aren't met? I feel like it is. Got 40 instead of 200. Show me the picture, John. Gary, nice trade. And then John Novak on the lesson. There's your first divergence. Trigs go higher, reset your count for 3 divergences. There's 1 and 2. And then it pulls right back. That's a good picture. That's a solid picture. Nice, Gary. Guys, it doesn't ever have to be stressful. Man, John, arbitrary stop movements. You just chummed the waters, didn't you? Everything set down. And nothing changed. No reason to move your stop. So, John, this is where that lesson, this is one of those things. And man, I'll tell you what, John, I did the same thing 1,000 times. So I am not throwing stones from my glass house. But if I'm in this trade and my first target's hit right here, I'm not going break even because do you see that circle? That circle, John, is where this bar is likely to stab up before the market continues down. That's why it's a continuation entry. And if I really believe in everything that's going on and my 13-2 is leading the way, I have to keep my stop where the market shouldn't go. Does that make sense, John? Yeah. And John's absolutely right. The stop lesson on this one, putting it behind the fib keeps you in the trade, keeps you in the money. It's a little bit, but it's only 12 ticks, right? It's not a lot, especially for this many advantages. And that was my fault in class. But as a brand new user, you're probably going to keep that risk minimal and then wait for the next best entry, right? So John, that look on the 5-1 is going to help you a lot. And you'll see it. When the market's trying to go up and it doesn't agree, when those small triggers roll, you'll see that stab back right at a mid-band to continue the move up. And you'll see it again right there. There's that stab back when everything finally agrees. So when I'm working on stop placement, I'm using that little roll of the triggers at a mid-band, and it's going to help me place those stops. Not the best look, not a horrible look. 1 divergence, strong triggers, a mid-band. What do your rules say? Weak triggers, 2 divergences. This is another one of those instances, and here it is. Triggers roll, stab back right to the areas, right at the small triggers for continuation. Guys, these are patterns that repeat themselves all day long. We'll leave it on NASDAQ. It moves the fastest. Guys, I'm going to take a few minutes. I'm going to bounce through. If you have a question, post it in the room. Let me know. I'm going to go mic silence for about 5 minutes. When I come back, we'll just focus on whatever you guys want to talk about. All right, y'all, here we go. Last hour. John Novak said he took a little bite. Let's see what he means. He said, when everything set up, when the triggers were strong, when the path is clear, he took a pullback to support inside the triggers and took it right up to Fibonacci resistance. Nice trade, John. And then, after exiting, he let everything break and took a little momentum style straight up to the next fib. John, beautiful trading. Very nicely done. Using advantages. Followed your plan. The trade lost. Got back in by mistake and just let the trade go. It's all right. You followed your plan. You got stopped out. Joel, were you here when John said, if your stop goes a tick below a red line, spend the extra $30, right? Get to the other side of that brick wall. It helps a lot with management. And then you did wonderful all the way down. I think that was great. I'm not sure that was an accidental entry. I think that was you gauging the advantages on the 13-2. And your brain said, Joel, you're an amazing chart reader. Get into this trade. And then beautiful job taking it all the way down and getting paid on it. Nice job, Joel. All right, so the NASDAQ has made it to a red line. The S&P is coming from a termination condition that created a full reversal that's providing odds favorable momentum. That sounds familiar. And then crude oil is just railing down, going to that next key area, it looks like, without much opportunity to get in. So guys, let's study. I'm going to open up the NASDAQ. And guys, the NASDAQ moves a lot. And let's show how you can do it historically. We're not going to worry about today. We've talked about today a lot. I'm going to scroll back on this bigger chart. And let's look at yesterday, guys. Let's start before midnight yesterday. And let's just see what kind of opportunities there are in the market. Strong triggers, no terminations. There's a circle, right? Great way to recognize the rules are met. We'll see if there was an entry. Support holds, triggers don't follow, and it goes right up to the key area, guys. Look at that termination condition. What a great opportunity to recognize where the market has the highest chance of reversal, and down it goes. Anything can happen, triggers. There's one of those tails. Guys, this may be a medium probability opportunity. If you don't forfeit any of the other advantages, this may be something that you work back in. You know not to trade into support with no triggers. You know not to trade into resistance with no triggers. You let it sort itself out and wait for the opportunity. Termination, once again, it goes up. A lot of movement yesterday. There's a 50-50 opportunity. Maybe it went, maybe it was rules met, maybe it wasn't. We'll take a look. Strong triggers coming from divergence. It's kind of a 50-50. We'll give it a circle. Guys, is everybody comfortable with what I'm doing right now? All I'm doing is going back and I'm looking to see when rules were met. Smalls are through, large are not, 50-50. But the bar right next to it, those triggers hadn't broken yet, guys. It's a termination condition. The simple process of this scrolling back, guys, is going to create advantages in your brain. It's going to teach you to recognize termination conditions after the fact, but you're going to get this stuck in your head, what it means and what happens after, and it gives you a great opportunity just for awareness. There's a termination condition that creates a full reversal. Full reversal gives odds favorable and a clear path, and guys, there's one of those tails. That's a great looking trade that went all the way up to Fibonacci resistance. So when I circle these tails and I get going on them, guys, I'm going to go back to the beginning of the day. Just going to go back on the 5-1 chart, and I'm going to compress a little bit because there's so much information on this. And even without a super clear look, you can see how you had a pullback directly to resistance, and it goes to the next area, guys. Winner, winner, chicken dinner, right? We circled the rules on the 13-2. The rules look good. Once again, straight back to a mid-band right there at the large triggers. The market continues up. The opportunities present themselves all day long. You just have to be patient. That one didn't make it to an area. Probably not your trade. And you had to be okay missing this one because it didn't fit the rules. But if you scroll back just a little bit more, right to resistance inside of favorable large triggers, right to the next area. Right to support right there at the large triggers. There's one of those everything turns looks if 3 divergences keeps you out of the trade. Guys, go back and do this study. NASDAQ will present you probably 50 opportunities, probably way more than that, over the last week. Go back and take these pictures, study, look at the entries. What did it look like? What was bringing success? What makes you confident? What makes you comfortable? I think that might have been it for circles. Let's see what happened at 1236. 1236, you had a 50-50. Over here, you had no divergence and a pullback to the mid-band. Another one. Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable gives a pullback right to the mid-band inside of favorable large triggers with no divergence, and that market rockets all the way down. Odds favorable, no termination conditions, right around 1126 coming from a term. What did it look like? Oh, that's not a trade. That doesn't fit the rules. Guys, what would you like to talk about? It's easy for me to flap my gums nonstop, guys. I'm really good at it. Love the sound of my own voice. I'm going to go mic silence for a minute. You guys let me know what you want to chit-chat about. Have a great afternoon, K-Pops. Appreciate you showing up every day. We'll see you in the morning. It's Friday tomorrow. I love that. What are we looking at right now, guys? We're looking at a termination condition that created a full reversal. We've identified odds favorable momentum. And we're 50-50 on 44, 27, 55. Is that divergence high going to stop the market? It has the potential to break with odds favorable momentum. Absolutely, Gary. Thank you. So at first, we'll keep it really simple. What is a termination condition? It's a simple comparison. It's a comparison of, and let me pull up the areas too, just so that we can talk about it. What are areas that may stop the market, that may reverse the market? And guys, all it is these are the areas. All of these areas reflect some sort of emotional response that's already happened in the market. They reflect an area where the buyers took control or the sellers took control, where these pivots were formed. Your software is amazing, and your software is going to go back and it is going to measure every swing in the market over a historical time frame. It's going to measure every swing in the market on different time frames. It's going to measure every swing in the market on synthetically created time frames. And it's going to take all of those measurements and it's going to weigh them out and it's going to sort them. And Gary, this is the biggest power. People used to do this by hand and they would take 5 or 6 areas and that was their day. Nexgen has automated the process. John Novak has automated the process. And you're getting these thousands of calculations. And ultimately, these thousands of calculations are giving you these red resistance, these 1-to-1s, these blue support. So you can identify these key psychological areas, these Fibonacci numbers that may reverse the market. And that's the beginning of it, is recognizing red resistance, blue support, divergence highs, divergence lows, 1-to-1s, and then being able to do that comparison as you get to these areas to determine whether or not they have the potential to stop the market. Remember that we say they may stop the market, they may create a reaction, they may have the potential for reversal. It's never guaranteed. Nothing in the market is ever guaranteed. But what we can do with this comparison, Gary, is we can have an idea of whether or not it's likely to break. And you do that with the simple comparison. It's 2 things. Price reaches the area, and then the triggers must remain below from a high, right? Or if it's trading down into a low, the triggers remain above. And that's the simple recipe to determine whether or not an area may hold or may break, or may create a reaction large enough to take you out of a potential trade. So price comes down and reaches these 1-to-1s. When the price bar, when that dynamic Renko price bar comes in contact with these 1-to-1s, all you have to do is ask yourself, where are the trigger lines? And if the trigger lines remained above the area, take care, Safia. If the trigger lines remain above the area, well, now you have a termination condition. This is your giant red flag that says, hey, sit on your hands for a minute because the market may reverse, it may react. And sometimes it may react a little bit and retest the area. Sometimes it may reverse it fully. If it reverses it fully, this is what we consider to be a strong bottom. A termination condition that creates a full reversal is a strong bottom. So you're going to see this, Gary, at all sorts of different areas. You're going to see it at 1-to-1s. You're going to see it Fibonacci. You're also going to see it at those divergence lows, those pivots that are created through a loss of momentum. And the pivot itself isn't a termination. It's when price comes back and retests that pivot. When the price bar reaches that line and the trigger lines remain above, now it becomes a termination condition. You see it at highs and you see it at lows. And it's just a matter, the same recipe no matter what direction. Price reaches the area, where the trigger lines. And the trigger lines are the key, exactly. But you want price to reach first. And we'll use price reaches, trigger lines don't follow. It's a termination condition. And you'll notice that even though price reaches, the trigger lines never really clear the area. And that lets you know that this support may be holding. And we'll see it again. Let's find one. This is a good example where price retraces all the way back to support and all the trigger lines remain above. And off it goes. But when we opened up NASDAQ and scrolled back a little bit ago, let me show you just how often and why rule number 2 is a big part of what we do. Because if you go back on the NASDAQ, there are times where the buyers take such strong control. Fibs break, right? They can break all the time. So it's almost like a stop and go. Price reaches resistance, none of the trigger lines break. You're going to pump the brakes, wait a second. And then if those trigger lines start breaking, well, then you're going to look for opportunities when that area that may have reversed the market gets broken with those strong triggers. But down to support, weak triggers at support, that's what reverses the market. You can see the reaction to support. Ultimately, the market continues down, but there was a reaction big enough to pull you out of a short trade. Up top, trigger lines can't go through, those divergences print. You're watching the market trying to form a top right here, and you can see it visually by the comparison of the trigger lines in the area. Same thing right here. It pulls all the way up to those 1-to-1s. The trigger lines don't budge, and the market continues back down. all the way to support, pushes it right back up, straight to resistance, pushes it back down. And you're going to see this over and over. And this is why rule number 2 is such an important rule, because it gives you the opportunity to skip this trade or to skip this trade, right? To skip this trade down into support because that path isn't clear. Does that help a little bit, Gary? And it's when you have that odds favorable momentum going into an area, that's when the area has the potential to break. You can see how the small triggers smash through, but the large triggers don't quite make it. These areas have the potential to break because of that great momentum. The trigger lines always lead the way. And it ultimately goes to that next area. And Gary, you're going to be able to recognize opportunities on a smaller, faster chart to look for an entry right about there with this potential to break with that much momentum, with everything going up, and especially when it's coming from a termination condition that creates a full reversal. So it's a little bit of patience, right? And it's a little bit of study to get good at them. John Novak used to go through market replay. He would load 5 or 6 days, crank it up to 50 times speed, and just say market should hold, market should break, market might hold, market might break, and get used to that comparison going through, training his brain to respect those termination conditions, to respect when price reaches resistance. No matter what your gut tells you, you're going to sit on your hands for just that second. It's either going to break or it's going to roll. And we're not in control of that, but we can identify when an area hasn't broken yet, when price may react to it. So that's termination conditions in a nutshell. And everything is a process, right? Once you're good at odds favorable momentum, it becomes really easy to recognize. And you can go through and do this as well. You can take everything off and just load your 2 triggers, your small and your large. And look at how many times when Fibonacci is absent, that momentum pushes the market and continues the direction, right? So you begin to develop trust in odds favorable momentum. You begin to develop trust in the idea that when the triggers are their strongest, it creates an advantage. And as you scroll down, you get those weak triggers. And it doesn't end the trend, but look at the bounce, right? Look at the bounce that happens when you take momentum out of the equation. And guys, it's all about trust. And if you just scroll back and you just go through it and just take pictures, circle tails, embrace the idea that strong triggers keep a market moving, well, then you're telling your brain, right? You're telling your brain that this is where the advantage lies, right? And you're telling your brain that this is where it goes away, and your brain's going to believe it through repetition. Your brain is going to begin to embrace this idea that when the triggers are their absolute strongest, my chance of success goes up, and that builds confidence. And you can do that with nothing more than trigger lines. And then the next step is taking that exact same look, those exact same circles, and adding the areas, adding those areas that may stop the market. You've circled the tails, and when I put in the areas, there's a tail and the smalls broke through. I'm going to look for an entry there. Let's see if we can find one where there was a termination condition. There's a tail directly into resistance. I know that that's not my trade. I know that that's not my opportunity because I just don't know whether it's going to hold or break. When the small triggers break through with odds favorable momentum, well, look, the market gives me another opportunity. So now you compound those strong triggers in a clear path, and it just becomes this process of constantly looking for the absolute best of the best. And you can do this. You can go back on the S&P 10 days and do that drill. Circle, right? Go through it, circle it, look at it. And then when you're done with 10 days on the S&P, go to crude oil and do the same thing, right? And then go to NASDAQ and do the same thing. All right, let's see what we have. GBP. I don't know what GBP is. Great Britain pound, I think. Is that right? Dollar versus a pound, that makes sense. All right, so let's take a look at it. You had a termination condition that created a full reversal, right? I love that. That's a strong bottom. You had odds favorable momentum. I'm a big fan of that look too, TJ. But let's talk about the next side of this. And let me bring it up. And we'll take a picture. And we're going to work through. I see that you have your checklist down there. And I want to talk about two different things when we talk about this trade. The first thing that I want to talk about is price reached a mid-band. It also reached resistance, and the trigger lines don't break through resistance. And that lets me know that I may not have that clear path yet. Even with the termination condition, that path isn't really clear because the trigger lines haven't cleared resistance yet. Does that make sense? So if nothing else, it's a little bit of a red flag. But that strong bottom, it helps. It helps a lot. But there's one other thing that I want to talk to you about, and this goes into termination. Not so much to clear the mid-band, but that area of resistance, right? Respecting those Fibonacci areas. But TJ, here's the other thing. There's this cool phenomenon that happens all the time, every day. Do you see how your large triggers have remained below the reversal bar marker here? But price came into resistance, it came into. So this is what we call the gap theory. And the gap theory states, when price accelerates, you know what, I'm not going to type all that out. That's ridiculous. I'm going to do this. If price pulls away from the large triggers fast and far, hits Fibonacci, hits a mid-band, and those large triggers remain a full bar away. And that's exactly what happened here. Your large triggers remain more than a full bar away. Well, there's this opportunity, there's this thing that happens that says that price typically, not always, but can close the gap. That's the wrong one. But can close the gap back to the large triggers. And really anything that happens between the top of this bar and the large triggers tends to get run over a little bit. It doesn't always happen. And a strong bottom helps it not happen. But with that big of a gap back to the large triggers, it becomes a patience piece. Very often it's going to go back and close that gap before continuation up. And I'm not sure what happened here. But that strong bottom, that momentum, everything going up, and you're getting in just above support, right? Right there at those large triggers. Stop has to go below the synthetics because it may close that gap. Does that make sense? And that's a good lesson on the gap theory there. I love the read. That's your first post. That's a good first post. Do you have an after picture? What happened after? Because there's always great information in what happened after. All right, let's see what we had here. Trading the NASDAQ. It's a pivot kind of from nowhere, so it's not a good top or bottom, right? It's just a pivot without divergence and the market decides to change direction. Totally cool. It happens sometimes. It's not quite odds favorable momentum. The smalls aren't outside the large the way we want them to be. But it's a strong trending market. And on your smaller, faster chart, do you notice how you don't have any areas inside of favorable large triggers to the upside? No reason to buy down here at support. Nothing supporting it on a large chart. So what happened? You said that it ran away from you, no fill. It was using this support and probably went from there. There is a template, TJ, to put onto your 13.2 that will make it look like a 5-1. That'll give you those areas inside of favorable large triggers and make it easier to trade the NASDAQ. I have mine. Let me find mine for you, and I'll just pop it over. I have a zip file already made up for you. But if you go to NinjaTrader 7 and you go to templates in chart, I'm giving you this right here, and if you take that 13.2, that NASDAQ 13.2 chart template, and apply it, what it's going to do is it's going to make your 13.2 look just like the way it looks on a 5.1. It's going to give you those areas. It's going to give you the large and the synthetic. Let me find my NASDAQ. But what it's going to do is it's going to give you the exact same look here so that you can be consistent across the board with the rules, right? And that's going to help you out a lot trying to trade NASDAQ. And if you need any help loading those up, remember Jason's over in tech. He'll take good care of you. John Novak looks like he took advantage of a termination that created a full reversal, and he took the momentum style entry. As he gets down close to his target, virtually zero risk at all. He's already got 6 points locked in. It's the same settings as the 5.1 on the 13.2 chart. There's the tech help coming in just in case. John, good looking momentum short. Taking advantage of termination conditions. Safia, you completed the eval in 5 days. How do you handle the other 7-day minimum? Isn't there just 2 more days to be funded if you're 5 in? You know what? Trade don't blow out. Stick to your plan. Your plan works, right? That's my thought. Or do one. But if you're worried about losing it all, isn't that crazy? Because your plan got you funded, didn't it? Stick to your plan. Set a loss for the day. Not funded? Oh, if you complete the eval in 5 days. Just trade, guys. Your plan gets you there, right? Your plan gets you there. That's like saying I have this most consistent plan that makes me money consistently. I win more than I lose. Everything is great, but now that it's real, I don't want to trade it. That feels like you don't trust the plan. Does that make sense? Because if you're that nervous about almost being funded, good Lord, what's going to happen when they tell you you're live? Just trade your plan. Your rules win more than they lose, Safia. I see it every day from you. And there you go. There's another one. Trade smaller. That's okay. That's it. You still have to trade for a minimum of 7 days. Gary, perfect momentum style. Nice job. Out of trouble. Great job. There you go. But I want to point something out to that effect, guys. Balls of steel, right? On simulator, on pretend money. Guys, people go to simulator and they follow their plan, they follow their rules, they do everything right. And Gary, I'm not saying that this is you. But people on simulator do great. Have you guys ever heard that phrase? Everybody's got a plan until they get punched in the mouth. It's a boxing thing. Everybody has a plan going into a fight until they get punched in the mouth. Going live is your punch in the mouth, guys. Will your training build that muscle memory? This is why we don't trade the wrong trades, right? This is why we don't chase everything. This is why we create a solid platform for success, because you're building muscle memory. So when it's time to perform, you're performing. And that is a great indicator that you're not following your plan and just need more time, guys. And it's okay to need more time. Don't rush it. 50-50 with 3 divergences. And there it goes. I've done it, guys. I've been a simulator millionaire. When you're on simulator, you have 100% confidence when you have zero risk, right? When it gets real, your confidence goes down if you don't trust the plan. That's the pucker factor. And the less you risk, the more apt you are to follow your plan, without a doubt. It's true. Guys, there's divergence from the middle of nowhere. It pulls up. There's that gap theory. Pulls it right back. Do you see that one, TJ? That's that gap theory again. Closes it back. And now we have a higher divergence. Now we have triggers getting above the areas. Now we have odds favorable. Yeah, let it marinate. Enjoy the ride on sim, guys. Get so good at it on simulator that when you get to a live scenario, your brain doesn't know the difference. And you're going to make mistakes. And you're going to have challenges. Take a deep breath, regroup, work through them. NASDAQ, trying to figure it out, right? S&P, trying to get through. Crude oil, they're trying to go up, but there's still stuff in the way. But it's certainly leaning up. Just have to make sure there's odds favorable and a clear path, guys. Repetition is key. Fibs rock. We're going to get coffee mugs with these. Support holds, takes it to resistance. Resistance holds, takes it to support. Support holds. I wonder if they're going to go back to resistance. Isn't that awesome? Guys, I'm amazed every day. Every day I work with this software, it just absolutely floors me. The accuracy. And there's one more Fibs rock picture, just for you doubting Thomases and Thomasinas. From resistance, stronger triggers break support. That support breaks, becomes resistance. All the way down to support, triggers roll, giddy up, head in the other direction. Just have to build confidence, right? Have to build trust. John says a pivot stop out would be nice. Hell, I think breaking through the area with odds favorable momentum, giving me a clear path would be nice. Because the reality is I don't care which direction I make my money. I just want those advantages, right? Just want those advantages. Guys, the second you start trying to predict, you're going to get married to your prediction, right? And you're going to miss the obvious sometime. Guys, we've got 10 minutes. What do you want to talk about? You know, Apex has a 90% sale on, right? Termination, 50-50. Resistance to termination. Guys, it's got to clear to the downside to have shorts, and it's got to roll and give us clear to the upside. And that is a good look to lock in. 90%, 80% recurring. Guys, that's $34 to control $50,000. $50,000. And you can do up to 20 accounts. I know because I looked at John sometimes. Guys, on 20 accounts, you could have a $100 day, right? And that same trade that only netted $100 turns into a $2,000 day. How ridiculous is that? Imagine when you start getting good and you have a $500 day. And then suddenly that turns into a $10,000 day, right? All from that one trade, from that high probability, best of the best, everything in your favor, nothing in your way trade. I do these little math runs, guys. They're all hypothetical, of course. But it's just the process. Just the process. Earl, the reversal marker is nothing more than where this bar becomes a reversal bar. That's it. I don't trade off of them. I will use them for stops every now and then. Well, this doesn't have divergence potential right now. Let me see if I can find a market with divergence potential. If I'm looking at long trades and my condition says divergence takes me out on a small chart, 2 ticks below this reversal marker, I'll know whether or not I'm going to have divergence. So I might put a stop right there. So that's one way that reversal bar markers may affect my trading. Another way they may affect my trading is using that gap theory. If the large triggers remain below the reversal bar marker, it may close that gap. Right? Do you see how this gave it room? If divergence printed, I wanted to be out. If it didn't, it left me room. So Earl, I won't use them for trades, but I'll use them for chart reads, determining when price may snap back to the large triggers, and I'll use them for stops. If you went short, stop maybe just past the large chart reversal bar marker. That's a good example of using them for stops once again. You're saying, I like the short, I like the conditions, but if it comes up and the large chart ends up creating a reversal bar, well, then I want to be out of that trade, right? Using it for stop placement, and that's not a high probability short. But that's an idea. Does that make sense, Earl? I don't know of any trade that uses it to get into a trade. But they help a lot for chart reads, and they're also effective helping out with stop placement. And the idea behind that is if this creates a reversal bar, well, then it's not a tail, right? And if we trade those tails, those areas inside of favorable large triggers, if this creates that reversal bar, well, then I've probably overshot my area. So it becomes effective for stops. You put stops just below the reversal bar after target 1. So you say, I made my money, and then if this bar is a reversal bar, it can take me out, and if it never creates that reversal bar, then I'm still in. That's great. Easy way to do it, right? It's opinionless. It creates an if-then scenario. Guys, I'm a huge fan of if-then scenarios. One of the challenges with that, though, Gary, is what if that reversal bar marker is right in an area of resistance inside of favorable large triggers? Do you adjust? Perfect. All right, guys, our numbers are dwindling. The market seems to be stuck. We've got no questions coming. So we're going to call it a day. And then John just posted, it's helpful when putting stops in for divergence potential exits. Were you not here when I just said that? But there's the video for it, guys. And that's good stuff. And there is a wealth of knowledge here. So Jim H, I can. What would be even more effective? Take care, Debbie. Is that if you show me pictures on your charts of what you consider to be a clear path, And let me give you a cheat sheet for it. And this is the easiest, most simple way that I know how to do it. If no triggers have broken through Jim H, there's not a clear path. If the small and the large have broken through, then the path is clear. That is the absolute easiest way. So if we go back on the chart, and let's go back and look. And we'll just do, I'm just looking for an easy example. Dun, dun, dun. I've probably scrolled over an easy example or two. All right. So price pulls up to resistance, right? None of the triggers break, therefore it's not a clear path. When the small triggers get above and the large remain below, now it's an area that has the potential to break, but it hasn't yet broken. And then if both the small and the large get above the area, then the path is considered clear. So you're going to see this all day. Price reached resistance, nothing broke, no clear path. Smalls made it through, but the large didn't. The path isn't clear. We're watching consolidation in the NASDAQ, guys. They're trying to decide whether to go up or down. You have Fibonacci keeping you out of that fight. Let them do what they do. Once again, price reaches resistance. Absolutely no trigger lines break through, Jim H. Smalls break through. It has the potential to break, but hasn't broken yet. Small and large get to the other side. Now the area is considered broken. Does that help a little bit? It does sometimes, doesn't it? And Jim, that's why I say that the majority of your trades are going to be medium probability trades. The majority of your trades are going to be those super strong triggers on an area with the potential to break. And when you learn how to take those, it's going to add trades. It's going to keep you from having to have an absolute clear path every time. But it'll still put you in a position to have more advantages than disadvantages. There's some days where it's clear forever, and there's some days where it seems like there's a big stack of fibs. Yeah, so it just depends on the day. And then TJ, you said CL putting in a good bottom. Let's not make it a verb, right? It either has or has not. It's either yes or no. So divergence prints, right, from everywhere, that's not really a good bottom. I love this picture. And it goes all the way up to that mid-band. The large triggers don't follow. And then check this out. Support holds all the triggers above. This termination condition, it doesn't even have a chance to create a full reversal. It's that second step after the gap theory and the market moves. Absolutely, man. That's a great looking bottom. And that's a bottom that sets you up for success on the other side of it for sure. Smalls above, large below, right? Two divergences going higher is a great sign. Support holds again, all the triggers above. It's a great sign. 50-50 trade coming up. Not a clear path yet. But if it's the perfect entry, absolutely, man. What a good look. What a great look. And then Gary says termination creates a full reversal. There's that look over here on the 50-50. There's an area inside of favorable large triggers. Notice how it's a termination on your 21 though, Gary. So your largest chart says termination. Your 50-50 says, it might break. Let it be perfect. Let it be perfect. What good is this chart if you don't respect it? I know that sounds silly. What good is having a chart if you're not going to listen to it? This chart says don't do it, absolutely. This chart says, it might work. No divergence on the pullback. If you took it, you might still be in, right? But knowing that this 50-50 is happening at a termination condition on a higher time frame, John, you're not willing to hold through trouble? You don't have to, right? You know where trouble is. You know exactly where trouble is. There's no reason to hold through trouble. Let trouble sort itself out, guys. And then look for those rules to be met. If I take a 50-50 without divergence with strong triggers, my stop has to be all the way down here around 26.25, right? Using that reversal bar marker. I've gone back to 39, which is that area that may or may not break. So I've probably taken quick profits, and I'm probably at break even, and depending on where I entered this trade, I may already be out of it. And 50-50s require the best to manage, right? So Gary, nice job. You get in, you take quick profits, you're not willing to risk it, and that's cool. That's great execution on a 50-50, without a doubt. But I ask myself, if I know that this is a giant solid red line with every trigger line below it, it's just going to make me manage a little more assertively. And Gary, you did the perfect job of managing it more assertively. Nice job. Solid. And now everything may roll and continue up, right? We'll look for one of those continuation styles. Gary, great trade. And guys, that is it for me today. You guys did amazing. Great questions, great feedback. I appreciate all of it. I will be back tomorrow morning at 9 a.m.